Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show. Attention A1 Trading Show fans. If you're interested.
All right, guys, welcome back to another live stream. Happy morning to you, or evening, wherever you are in the world, afternoon. We just had some interesting data come out for the ADP non-farm employment change. And this would actually be positive number 2 for jobs data this week. And things are looking good so far this week for the story. In terms of the story, what I'm referring to is specifically the stock market story. Today's news, a little bit stronger for the US dollar. Not so good for metals, right? Gold down on this, which would make sense. We're seeing better than expected jobs data this week. This is strike 2 for the bears when it comes to jobs data, because if you are somebody who is saying, oh, you know, I want the dollar to just crash through the lows and keep going big time. Well, the tricky part with that is that we've had 2 data points this week that said the contrary. We had JOLTS job openings yesterday, which were better than expected. And today's ADP employment change data actually came out also better than expected. So let's break this down for just a moment. We had a forecast of 124,000 jobs created. We got 143,000. Another check mark for the labor market, and that puts us in a position to see perhaps a bit of a stronger US dollar and also perhaps a little bit of a bounce in stocks. We'll see if that plays out, because the idea here is basically if the labor market is confident, stocks could remain strong. And we'll come back to stocks in just a moment. Let's do the easier one first, which is taking a look at the dollar. Dollar is up off of slightly better than expected labor data, and that would cause a little bit of a push down in gold. Is this going to continue? It could, but there's also a bit of a tricky variable today and this week, that being the geopolitical situation in the Middle East, which is a big old question mark. At least me and probably 99.99% of all of us here don't know what's going to happen next in the Middle East. We are getting the headlines after everything happens. We don't know what's going to happen next. So my point was saying that is that gold is a bit of a wild card this week because we have big headlines out of the Middle East. We don't know what the story is going to do next. If things get resolved peacefully, gold probably comes down. If things escalate or get, more worrisome, gold probably goes up on that concern, right? Remember that gold is a bit of a store of value. It's a bit of a flight to safety for many investors. And so if you're somebody who's watching gold this week, the geopolitics just put a big old question mark on the whole thing. That being said, if I'm taking a position on gold, it would be waiting for bigger pullbacks and confirmation from the Edge Finder. But currently, I'm not shorting this. I think selling this is incredibly difficult to do. Just like I would say trying to sell the stock market when it's in a bull market is very hard to do. Same thing with gold. When gold is in a bull market, trying to short a bull market rally for gold is just asking for trouble. So when it comes to gold, where are we at on the Edge Finder? Let's take a look and just filter out some readings, and you can see no sign of gold in current top setups. If we filter here for metals only, we can see gold is getting a neutral or +0 reading. That is because when we look at the economic data, there's a bit of a mixed picture. There's some things that are showing weakness, like the PMIs, but then there are other things that are not so bad, like unemployment rate wasn't so bad, right? Unemployment rate, not skyrocketing like many people had been afraid of. So right now, the main thing that I see driving gold is geopolitics, which is not something that I can predict. So that basically leaves me with nothing to do on gold. Let's move on. And again, if you're somebody who trades only one thing, the tough part about only trading one thing, like I know a lot of traders just love to trade gold, or they trade, NASDAQ only, or they trade S&P 500 only, and all of that is fine. But if you do that, you also have to accept there might be days, weeks, or possibly even months where you don't have setups because criteria is not being met. When you open up your horizons to trading more assets, the positive there is that you can usually find a lot more potential setups that still make good sense. Still looking at some of the USD crosses. I actually do have a pound dollar trade that I took yesterday, which it's slightly in the green. I like this trade still, so I bought the pound yesterday during the big sell-off with a stop loss below. We'll see how that one plays out. It was a 4-hour/daily chart level. I took a lot of trades in the VIP room yesterday. It was a very, very active trade day for me. In fact, probably the most. I said to Frank, probably the most active that I've had in the stock market. I'm sorry, in the Forex, stocks, options, everything at once day in a very long time. I took a lot of positions yesterday. In fact, I'll show you some of the stuff that I did. I'm going to pull it up here. Hold on. So this was the pound dollar trade that I took yesterday in the VIP. So bought the dip on pound, retest of this area of support, 38.2 to 50% range. I talked about that yesterday in stream. Did ended up pulling the trigger on that idea. And we'll see how that one goes. So that one would benefit from a weaker dollar. In terms of the indices, completely flat on the NASDAQ, slightly lower on S&P, Dow Jones. Russell is lower here today. But did you guys see China? My goodness, man. China just does not quit. You went full Nick yesterday in Discord. I mean, I took so many trades yesterday. Now, to be fair, a lot of the trades that I took yesterday were options trades, which basically just was, I wrote a lot of, I sold a lot of cash secured puts on a lot of different stocks that I like. JP Morgan, Apple, Amazon. I sold my CrowdStrike for a profit. I had a lot of stocks and options trades yesterday. I also had some ETF trades yesterday. I had a Forex trade yesterday and index trade yesterday. I mean, I was on all cylinders. But that's how it goes for me. I don't know if you guys have a similar experience with your type of trading, but for me, I usually take a ton of trades or like none at all. And I just, if I have a trade, for example, let's say that let's say that I was long the NASDAQ over here and I bought this dip and the market just trails higher. Like, unless I get trailed out there, I just have nothing to do other than trail stops. And those are the best times. When I went into this week very, very flat, like I did not have any positions on. I closed out on my silver trade for a profit. So I had like nothing on. And then this week we got the dip, which gave me a lot of different things that I was waiting on to get started on. So I've been very busy this week, and it probably will continue to be a busy week from here. Do you risk more on indices, commodities, or Forex? Indices and commodities are primarily what I trade. I trade a little bit of Forex, but it is a much smaller portion of what I do. I'm most comfortable, I feel knowledgeable on commodities and indices. So that is typically where the biggest allocation of capital and risk for me is. What were the ETF and index trades? Benny, I can't give it all away. Come join the VIP room. If you guys want to get access to all the trades that I'm taking in full detail, come join the Discord. It's kind of what it's there for. You get access to every trade I'm taking in real time. I give a lot of stuff away for free, but there are some things got to be kept sacred for members who support the service and the streams and everything. So if you'd like to join us, we'll drop a link here in the chat to speak with a member of our team about getting access. If you'd like to send us a direct message and find out information about the membership, we are super active. Join the Discord. Yusuf says, joining Discord was the best thing I did. Appreciate you, man. Thank you very much. It is the place to be. I'm telling you what. Second best thing was the Edge Finder. Yusuf is an ally to the stream. I appreciate you. Anyways, let's keep going. Take a look at gold here. Come back to gold. So on the lower time frames, I think sellers could have a little bit more squeeze if you get a breakthrough here. Like if you get a breakdown through that level, then we may very well see something like this. It could happen. It's not something I'd bet on. There was debates last night between the two VPs. I was watching to see if there was any volatility on that front. And I'm not going to lie, I don't talk politics ever on my stream, but I'm not going to lie, I like their debate a lot better than Trump and Harris. Like I felt like the debate last night, if anybody watched it, I felt like it was pretty respectful on both sides and both were very well spoken. Dollar index continuing higher here. Big break to the upside. But here's the question for the dollar index. Is the dollar index just heading to the top of this consolidation before a big push lower, or is it going to break out? And the answer, again, I said it in my video yesterday, 3 letters, NFP, right? If you get NFP on Friday that takes us higher, what would that look like? Well, it would look like better than expected jobs, like a lot of jobs added and unemployment rate staying steady. If you get that picture on Friday, right? If you get NFP looking real strong on Friday, then it could reverse course for the dollar big time in the short run. We don't have the forecast up in front of us, but let's just say, for example, that we get like, a big uptick in jobs from where we've been. That could be incredibly bullish for the dollar. The dollar's been looking for something to rally on. It's been really beaten down. So if you get, you're starting to see some good evidence for the jobs market this week. JOLTS job openings came out better than expected yesterday. Today's ADP numbers better than expected. And, when it comes to going to stocks now, this is kind of what I want to see. There are two thoughts here. There are people who are more in favor of rate cuts. Like they're cheering for just give us rate cuts as fast as possible. And that is the hyperfixation. And, some people are even so much in that camp that they want to continue to see the labor market cooling off, weakening, so that rate cuts can come into the picture and reaccelerate the economy. There are people who are very, very much praying for rate cuts. And then there are people who are not actually praying for them, like myself and Frank. Frank and I, we had a dialogue yesterday about this on the stream. If you caught it, I thought it was a pretty good conversation. Rate cuts are usually in response to slowing economic data. As a bull in the market, I don't go to sleep at night and pray for rate cuts, because usually rate cuts fast historically are not a good thing. Rate cuts nice and slow are actually a positive thing. So the other day, we had 2 days ago, Jerome Powell spoke on Monday. This is Tuesday. Here's the Monday move. Okay. On Monday's intraday price action on the S&P 500, Powell came out and said, we're not on a strict plan to cut rates, and we may need to go slow. And the stock market did not like that. But I loved it. In fact, that was bullish to me. And I didn't buy it at that time. But that was a bullish thing to me because I want to hear that the state of the economy is pretty solid and that we don't need rate cuts. Like rate cuts would be nice, but we don't need them immediately. We don't need prompt rate cuts to save the day. That is not what I want or what I look for in buying the stock market. One of the reasons that I'm feeling pretty bullish about the stock market overall is that if we don't need rate cuts quickly, there are going to be probably some short-term pullbacks that get generated from that. But on a longer-term basis, that brings me back to maybe this sort of story that we saw in 2023 and the first portion of 2024, which is I want to be long the NASDAQ, big tech, because those companies don't need rate cuts to continue to grow at a fast rate. Okay? So where am I most convicted in the stock market? I like the idea of being long the NASDAQ. And I like the idea of having a little bit of exposure to the Russell. So that's where I'm at. You need rate cuts to happen fast enough, not too quick, but faster, and need prices to fall so wages can catch up. Because inflation and everything went up and wages are stuck at the same spot. You're close on this answer, but I like where you're headed with this, but I think you're actually missing a part. If you have prices fall, you have a recession. Prices do not fall in a strong economy. Prices only ever fall in US history when things are bad. Because prices going up means that consumers are in a healthy enough stage to continue to bid them up. What you really want is prices to go up slower. And that's what we've seen progress on. Inflation in the United States is still positive. Inflation in the US is not, prices are not going down. And if you're waiting for prices to go down, hold your breath because you don't actually want that. In fact, if you do get prices going down in the US, most likely a lot of people probably lost their job and the economy has fallen apart. So we don't want inflation. We don't want inflation to go negative. We want inflation to just be more tolerable. Tolerable? Yeah. Now, in terms of rate cuts, we want rate cuts to happen slowly. At least that's what I want. If rate cuts happen quickly, it's usually in response to souring economic data, people losing jobs, consumers really, really struggling. They are struggling, don't get me wrong, but I'm talking about things can get much worse. So you don't want them to get much worse to trigger a bunch of rate cuts, because usually by the time they're cutting rates quickly, people are losing jobs left, right, and center. You see what I mean? So we actually want, in terms of a Goldilocks scenario, you want rates to come down gradually and prices to go up gradually. Does that make sense? Are we on the same page? Type yes in the chat if that makes sense. Hopefully it does. And we got S&P 500 down 0.28%. NASDAQ's down 0.15%. Take a look at gold, down 0.5% this morning. Silver's up 0.5%. Copper's up 0.8%. Oil's up 1.5%. The bounce in oil looks pretty interesting. You have two sides to this story now, because now you have geopolitics, but you also have China. You guys, I mentioned it earlier in the stream, but if you guys seen China, look at the Chinese stock market today. It is up on the day another 7%. Not on the year, not on the month. The day is up 7%. Guys, the US stock market over the long term has averaged like 7% per year. China's up 7% per day, or today, not per day. But to be fair though, you had to sit through some agony. If you've been a Chinese stock market investor, you're at break even if you bought in 2018. Break even. So this is, you can celebrate in the short run a huge pop here, but you have to give some context to it. Chinese stock market has been so beaten down. This is a bit of a short squeeze rally. There's probably a ton of short covering that is causing this type of move. Is this sustainable at this rate? No. But could it be the start of a bigger bottom in the stock market for China? Possibly. And what does that mean? That means so much to so many investors. Even if you have no Chinese stocks in your portfolio or you don't trade China, you may trade it more than you think, because Chinese data impacts. If you trade one of the following things, Chinese stock market matters to you. You ready? If you think this doesn't matter to me, move on, then I'm going to prove you wrong. The Chinese stock market means a lot to gold. It means a lot to silver, copper, oil, the US stock market, S&P, NASDAQ, Dow Jones, maybe a little bit of the Russell, other Asian stock markets, yes. The dollar, of course. Bitcoin. I don't know. Maybe not Bitcoin. I'm not sure. I'm not sure about Bitcoin. Yields, certainly. And every currency pair, yes. The Australian dollar specifically does a lot of business with China. So yeah, pretty much everything. The Chinese stock market is the second biggest economy in the world. It matters, and it's coming awake. This is good news for global stock markets. Although the correlation is somewhat low between the US and Chinese stock market in recent years, remember that companies like Nike, who sell a huge amount of shoes to Chinese investors. By the way, what just happened to Nike? Nike's down. Did they have earnings? Oh, they had earnings. They missed earnings. Not good. Nike is in a rough spot. Maybe Nike's not a good example, but perhaps we can do Apple. So Apple sells products all over the world, but a huge customer of Apple is the Chinese people. Tesla, huge customer of Tesla is the Chinese people, right? So if you get strength in the Chinese stock market, if they're coming back into full swing, it matters to all of us substantially. But answer, guys, please. Is it going to fall? Mask Dude 101. Keep the mask on, okay? Because here's the thing. We get people all the time in the chat. Is gold going to go up? Is Dow Jones, is US 30 going to sell? No one knows for certain. Trading is all educated guesswork. And these sorts of questions, I don't mean to pick on you. These are the sort of questions that beginners ask. They're like, is gold going to go up? Is NFP going to go up or down? None of us know. We wish we did. It would make trading easy. All of us are making educated guesses, not necessarily on the economic news data. Like, I don't know what's going to happen, but like with NFP, but once it comes out, I can make a better educated guess. I'll give you a live example of what happened today. Today's ADP non-farm employment change data came in better than expected. Now, if you're a gambling, chart junkie, then you don't care what this actually means. You just are like, ooh, give me big spikes so I can, make a monkey trade and make a bunch of money, right? Like, no. What does this actually tell us? Like, let's use our brains. Let's use fundamental analysis, because we can. Unemployment or employment data matters to every single person on planet Earth to some degree, not just traders. This is real world forces. So more people got jobs than what were forecasted. That's good news for what? For the dollar, right? Dollar should be a little stronger this morning. And there it is. Dollar is stronger this morning. Okay. So what do we do with that? Well, we factor it in and we say, well, maybe pullbacks in the dollar look interesting if enough criteria gives us a bullish bias. Now, to simplify that process that I just explained, I built a software. My entire company, A1 Trading, our primary function is we build software that helps to digest fundamental analysis. So I don't sell a course, but I do sell software, and we sell some of the best dang software in the whole industry. So if you guys would like to get access to the Edge Finder, which is this whole tool that I'm looking at, all these different tools and indicators that help us digest economic data in an easier way, I'm going to drop a link here, or have the wonderful producer behind the scenes drop a link for us to sign up for a trial. And I'm going to give you a second link in just a moment. But first, if you guys would like to apply for a trial to the Edge Finder, it is a 30-day trial. It is not free, but you can find out all the information by applying right here. Thanks, Nick. I started trading yesterday. Okay, Mask, I got to speak to you. If you guys would like to get a trial, please use this link. It's just been dropped in the chat. Okay, Mask Dude, listen to me very carefully. Thanks, Nick. I started trading yesterday. I want to double my grandma's pension fund. That's an honorable venture that you have taken on. Like wanting to your grandma, or maybe it was inherited money. But do not, I'm telling you, like from my perspective, I have done social media in the trading world for years and years now, and I have received so many messages just like this. You know what happens next? They blow grandma's pension funds because they don't know how hard trading is. This is the equivalent difficulty of getting a 4-year degree in computer science. Actually, it's way harder. I did that in my schooling. I went to school for programming, and this is way harder. Becoming a profitable trader is harder than becoming a good programmer in computer science, because I've done both. I'm okay at programming, but you get my point. So please understand, the first thing I need you to hear from me, this is the hardest way to make money, but it is very scalable once you know how to do it. Okay? It's very hard. I know he's potentially trolling, but you know somebody out there is not trolling. Even if Mask Dude is trolling me, even if he is, somebody out there is in that real scenario where they're like, I actually want to trade my mom's money, or my grandma left me money, or something. Like, they're real people. So I don't even care if it's a real or not thing. If you are new to trading, do not touch grandma's money. Use a demo account. Learn how to trade, take it seriously. And honestly, what you should do, in my opinion, you should speak to a financial advisor. That's actually what my advice to you would be. Go speak to an financial advisor about what your situation is. If you have money to work in the markets and you're new to trading, you have no right trading it, in my opinion. You don't know how hard this stuff is until you do. And you don't want to find out losing every penny that your grandmother left you, right? Don't do it. I'm telling you. Can you guys just like put yourself in my perspective for a second and open up my inbox on Instagram? Do you know how many messages I get of people saying they ruined themselves? Way too many. It is sort of a depressing part of my job. Now, on the other hand, there are other people who have sent me many DMs saying, Nick, I put in the work. I've become profitable. It took an arm and a leg, but I've made it to the other side, and I'm glad that I watched some of your videos. That's the best part of my job. But the first message is the worst part. There's two different types of messages. The lazy messages of people saying, I didn't put the work in, I lost everything. I mean, I'm telling you, don't be that next DM. I say it in my videos often, don't let that next DM be you. This is the hardest thing that you ever have tried, and you don't even know it yet. Okay, that's all I got. That's hopefully just a light Wednesday morning message for everyone. Sometimes people accuse me of being like a naysayer or negative on this stuff. I'm actually incredibly positive about trading. I love trading. I love investing. I love the financial markets. But I like to scare people because I know how much this hurts people that don't know how difficult it really is. Okay, so with all that depressing conversation out of the way, dollar index is a little bit up here this morning. S&P is slightly off of its lows, but it hasn't made too much of a move. NASDAQ's just barely positive. So stock markets are back and forth, probably just waiting for the big one this week, which is NFP. You know what else is the big one for me this week is actually PMI data, services PMI tomorrow. Actually, tomorrow is, let's say on a 1 to 10 scale, tomorrow is a 7. Friday is a 9 in terms of like potential volatility. A 10 would be like a Fed day mixed with a CPI in the morning. That would be a 10 day. But 9 is pretty dang close. Okay. Don't know your IG? Oh, you're speaking to someone else. If anybody would like to follow me on Instagram, just because I mentioned it, it's at TraderNickFX. Same on Twitter. You can follow me there. Double your money means lose 90% of the account within 90 days. Yep. Ball out. We're on the same page with that one. We may not always be on the same page, but that one, same page. One day people will thank and appreciate your honesty. Don't relent. Thanks, Lee. I'll take the fall. You know, like I am not like I am kind of a skeptical person. But I'm not a negative person. Like I think there is a way to be a skeptical person without being a negative person. I'm very positive, I feel like, in my actual life. But my approach to problem solving is very skeptical. Like I'm very like I say no first and then maybe yes later. James is going to touch in on this subject. He's coming in next. Guys, we're going to let the stream change over to our next host. We got Forex James. And if you didn't get it drilled from me on this topic, we got more good commentary coming from FX James here. As I transition here, we're going to take a quick break. Check out these edits we've been working on for the month of October. They're super fun. Actually, last thing I will say before we switch over is we're doing an Edge Finder giveaway. I meant to say it earlier. We'll drop the link if you guys would like to enter for a chance to win a free copy of the Edge Finder. The link is in the chat right now. So get yourself a potential free copy of the Edge Finder. Join right here. It is free to join. And now enjoy this quick little break before we come back with Forex James to touch on that subject.
Ooh, looks like A1 Trading is doing another Edge Finder giveaway. I've been trying to win one of these for a lifetime. Let's see. All I have to do is click the link in the description and fill out this form, so they can tell me I'm the winner, of course, and submit. Now, I have to play the waiting game. Man, I hope I win.
For this week only, we are giving away a free copy of the Edge Finder. Click the link in the description or the one being dropped in the live chat. Fill out the form and submit your name for a chance to win. Good luck.
Hello. How's everyone doing? Hope you're all having a great Wednesday. It's hump day, halfway through the week. Yesterday was a little bit rocky, to say the least. We had quite a sudden injection of volatility in the markets as we saw Iran send some missiles to Iran. But to be honest, it was actually relatively tame compared to what it could have been. But before we start, I will, as I said, I want to touch on the topic Nick was talking about. And it's not the same topic exactly, but it relates. So I get contacted, or I see people talking about it a lot. It's like, my parents don't believe in my trading. What do I do? Or my friends don't like trading, or, people don't support the journey. And I always say, why would they? If you look at trading from a non-trader's aspect, so a regular day-to-day person, almost every retail trader fails. It's like 90% quits within 90 days, something along those lines, or 90% lose all the money in 90 days. And then on top of that, you've got like the stats. I think most brokers say it's 90 to 95% of retail traders lose money. Why would you ever expect anyone to support you as a trader until you've proven yourself, until you've got that 6 months to a year track record where you can say, look, I've been doing this. It's not luck, it's consistent, and I can do it. You shouldn't expect anyone to support you. It's like, why would you support someone going to a casino to gamble all their money every day, even though they might have a strategy, they might have an edge on the casino, like some professional gamblers do? Until they've proven that, you're not going to trust them, are you? You're not going to give them money, and you're not going to say, oh, this guy's a professional gambler. I fully support it before he's actually done anything. So don't take it to heart. I wouldn't, if I got a message from one of my friends saying they're going to start trading, I wouldn't support them just because I know how difficult it can be. And it took me a long time. It takes a lot of traders a long time to become profitable or even break even at that point. So yeah, I mean, as I said, it's not exactly the same topic, but it runs off in a similar way. So let's get into the markets. Today, I placed a trade on the pound Swiss. So we saw, obviously, as Israel sent those missiles to Iran, we saw a very brief risk-off market. So we saw the dollar spike up. We obviously had dollar news yesterday as well. We had ADP come out positive, and we had positive jolts yesterday as well. So that also boosted the dollar. We saw the yen gain a little bit of strength. We saw the Swiss also do pretty well for itself. And to be honest, that was great for my setup. It pulled me back into this entry zone on pound Swiss that I missed previously. So I'm in here just for a one-to-one. This is basically just a sort of intraday position or very short-term swing position. And the reason I've taken this is because I've been watching it for a long time. I got the opportunity to enter. So I've had to reduce the risk reward I'm happy to get. So I am more than happy to get one-to-one on this one. And the reason is because the Iran-Israel thing, I don't view as over. I see that was the start. So this, in my book, could be the calm before the storm. So I'm happy, as I said, to take this one-to-one, get out. And then I'm also positioned in oil to the short side. Again, just looking for a short correction, possibly in the calm before the storm as markets slightly relax. And then maybe we continue to the upside on oil. So on this one, I don't really have a hard take profit. I will trail stops and maybe close out when I get to 3%, if I can get that. Moving forwards, we are also positioned risk off as well. So we are long on silver. This one's very similar to gold in terms of it benefits from the 50 basis point cut we've already had. And I think there's 63% expectation or probability that we get another rate cut in November as well. And of course, we've just had some tensions increase as well. So silver and gold look great, but silver has the more stable entry at the moment compared to gold. What's your take on pound dollar? Pound dollar, I am bullish on. Let's see, where's pound dollar? The problem is with pound dollar, it could very easily continue to the downside, especially if the Middle East continues the way it is. And the reason is, sorry, I was reading something. The reason is the dollar does quite well historically or typically on war. So obviously the pound doesn't really. So people would generally be selling the pound to get into the US dollar in that situation if we do see sort of more of a war type of environment come up. So really based on the overall macros, despite not including the Middle East, I would be bullish. Bank of England's holding rates. We've had the Fed cutting rates. So we've got central bank divergence. We've also got relatively stable data out of the UK. The US data looks better, but I would still be happy to sell it for the pound. But again, for me right now, this isn't a trade I would want to get into because I would want to swing trade this. And just given that the dollar could perform very well if there is more war coming in, then, I expect pound dollar to continue to the downside. Euro dollar, we can get to that. Palladium's doing good. I have never traded palladium. I can take a look in a minute though. Is that because the UK isn't as stable of an economy compared to the USA? Actually, that's a great point as well. So if we look at, if there's no point drawing, but if we look at the UK economy compared to the US, the UK is stable. Don't get me wrong. I might be a bear over the long term, but I don't think the UK is going to crash. I don't think it's going to be a huge depression, at least yet anyway. But the US has a lot more to support it. So the US, I would never be a major bear. You might see me selling it, when we have rate cuts and things, but you'll never see me saying, the US dollar is going to crash. It's going to drop down to, 50 or something, just because there is always something for the dollar to rely on. But yeah, that's my take. what was it? We can have a look at euro dollar, and I'll go and have a look at palladium. So euro dollar is very, very similar to the pound dollar. Get rid of that. So again, in times of war, investors would generally sell the euro and buy the dollar. So generally speaking, we would more be looking to short this. And I've been saying actually that in fact, I think it was Monday, I was saying that I would more be looking to go short on euro dollar, but I need a catalyst to back that up. And I think I might have just had that. So let me just pull up some research here to show you why. Just give me a second. Here. So this is a research document that I put together every week. The reason for euro dollar short, the Eurozone is struggling with weak growth and inflation concerns, which are likely to force the ECB into further rate cuts. The USD, on the other hand, is expected to remain strong due to US economic outperformance and the Fed's rate cutting cycle, which is projected to end sooner than that of the ECB. This widening policy divergence between the Fed and the ECB makes Euro USD a solid short opportunity. So if we look on the weekly time frame as well, we've got pretty strong resistance through here. And remember, this is a weekly level of resistance, so it is something you should be paying attention to, really. We have also broken above this 200 moving average. So it's a case of, is this area that price is currently at going to be respected? Because don't get me wrong, we could definitely break above and continue up. However, if we're looking at a central bank divergence between the ECB and the Fed, we're also looking at potential war in the Middle East, which would obviously benefit the US dollar. This short position on euro dollar might be quite attractive. So I'm not ready to get into this yet, but it's definitely something that I'm interested in. Liz Truss almost crashed us, if you remember, James. Yes, I do. Liz Truss's mini budget was tragic. I think that's probably the worst attempt at being in a position of leadership I've ever seen. Boris Johnson was also quite questionable, but at least he tried. What do your entries look like? So my one on oil here, this was taken off the 15 minutes. You can see the H4 here is showing rejection to the upside off this quite nice daily level. So kind of just looking for a very basic break and retest here, looking also for the correction of the impulse move we saw yesterday when the missiles were announced. We've also got the RSI that's overbought. So, this is actually quite a low probability trade just because of the sort of market drivers behind oil at the moment. But I'm happy to take that risk. You can see I'm looking really for a 1 to 5 here, ideally. So if I can get that, then great. If not, then fine. It is what it is. Is US 30 going to fall? Maybe, maybe not. It's difficult to say. If we have war, then possibly yes. However, generally just speaking on the global macros at the moment, then more than likely not, because we have rate cuts coming, and rate cuts typically are good for stocks. So the NASDAQ, the US 30, the SP500, the Russell, this is assuming that we don't have some sort of all-out war, would generally be quite bullish in my eyes. Thoughts on dollar Swiss? So I'm not in this position, by the way. Dollar Swiss, I don't have any interest in. So you can see I was looking to go short, but didn't take it. And during this period here from the end of August, so let me just move that to around here. So the end of August until the end of September, I think was meant to be a very, very bullish period. And we didn't have that. And that's because of the rate cuts. We also had a risk off market. So we had, a weaker dollar and a relatively stronger Swiss. And now we've got risk off market due to war, which again benefits the dollar and also the Swiss. So it's kind of like trying to trade two strong currencies against each other. So I've got no interest in dollar Swiss, really. Greetings from Black Forest, Germany. Hello, Ben. Hope you're doing well. what's your take on New Zealand dollar? So yeah, you can see I was looking to go long here. That idea is now scrapped, obviously, because the dollar is performing quite well. It'd be interesting actually to see how far the dollar can push, because we're still stuck in a range. So I'm not yet super bearish on the super bullish on the dollar. But if we can start breaking out of the previous highs, excuse me, if we can start breaking out of these highs, then it might be a sign that we could start positioning ourselves for a bullish dollar, hence shorting euro dollar. In terms of the New Zealand dollar, though, I'm never really a huge fan of New Zealand dollar. Technically, actually, this looks really good to go short. So just bounced off or just rejected this 200 weekly moving average. We've also rejected this sort of level here through resistance. We've got a relatively stronger dollar. So yeah, to be honest, I'm going to scrap this idea and might start looking to go short, possibly. But yeah, again, not right now, but yeah, I think shorts are on the table at some point. Not too late to buy palladium. Let's have a look at palladium. I'm not even sure what the ticker is. Oh, it's XPD USD. You know what? Palladium does actually look really nice technically. Let's see something here actually. Oh, Phantom, you might have checked a box here. Maybe I'll have a look at this after the stream and do some research on palladium. Like I said, I've never traded it, so when I'm saying I might look to buy, that doesn't mean you should go and buy, because I don't really know much about palladium, to be quite honest. You know how EU, GU normally move in sync. If ECB does cut rates and UK doesn't or cut at a slower pace, will that cause a big divergence, as I normally trade these pairs using the other confluence? That's a good point. So the pound is quite correlated to the euro. It's not like they're totally separate. So if we have the ECB cutting rates more aggressively than the Bank of England, it will obviously cause a divergence. Let me just have a quick think about this. So yeah, it doesn't mean that they will necessarily move in the same way. If we have that big of a divergence, you could very easily see euro dollar going down and pound dollar going up. However, that's also based on the relative data on the US. If the US is super bullish, then you can still expect both of them to be bearish. Please, how can I message you? Victor, you can message me anywhere. You can go on Twitter, just type in my name, I'll come up, or Instagram. But yeah, palladium does look like a banger, technically, again. I'll tell you what, should we do, actually, let me just see. I've got 10 minutes left. Let me just see if I have anything on palladium already down. I've got platinum, copper, silver, and gold. That's a shame. Yeah, so nothing on hand. So yeah, I'll have to go away and do that. How long will you be in the pound Swiss trade for? That's a good question. Hopefully not long. I would quite like to get out of pound Swiss. We've just had the H4 close, so I'm going to trail my stop to break even, actually, I think. So let me just mark that up so I don't forget after the stream. So I'm going to move stops to break even. Hopefully I'll be out by tomorrow. But, you know, I'll have to just let it run. I thought palladium was from Marvel movies. Is that what it is? Palladium? But yeah, oil looks really good going forward. Silver also looking quite healthy. So yeah, positioned very well actually at the moment. The markets could turn, but if they turn, then we're protected by silver to mitigate some risk. So the positioning I'm more than happy with. Please analyze USD JPY. So we'll go over UJ, and then I think, who have we got on after this? You got Gary on after this. So on dollar yen. Ball Out, actually, I'm not sure if he's still here, but I know Ball Out watches these shows. He actually called out this 160 or 146 level on Monday, which, you know, if he's still here, then you're almost at your target. So dollar yen is tricky. And actually, let me just read something here. One of our members put, we are not, this is from the Japan's PM, quoting, "We are not in an environment for an additional rate hike." So dovish again on the yen, hence we've had a relatively bullish period on dollar yen. So if we have war in Israel, between Iran and Israel, that's bullish for the US dollar. We've got positive ADP, which could signal relatively better NFP, which is bullish for the dollar. That might give some hope from investors for the dollar. We've also had positive jolts. So that's four things, just face value that are good for the dollar. And we've just had relatively dovish news from Japan's PM. So we've got quite a nice divergence here. The problem is we've also still got rate cuts for the Fed, and we've also likely remain flat from the Bank of Japan. So overall, I'd actually be quite bullish on the dollar yen at the moment. So we'll have to see. Again, it's not something I'm willing to trade. I won't be getting into any positions, but yeah, we'll see. Sorry, just give me a moment. I'm a bit of a slow reader. I need to catch up on this chat. Should I sell US30 now? Mask dude, no, definitely. I'm going to give you a piece of advice, and I've said this a few times, but if you're coming to a stream to ask if you should buy or sell things, you shouldn't be buying or selling anything other than demo accounts. I don't mean that in a nasty way. It's just because what if, let's say trading extreme is down for a week and you placed a trade the week before because someone said this looks good to buy or sell. You have no idea what to do. So it's never good to rely on someone, especially on stream. But yeah, US30, I think for now is relatively flat, so I wouldn't really be looking to trade it. Same goes for you, hanger bangers. Guys, if you want nice signal, actually, oil looks like it might be pulling back. And again, this is a relatively low probability trade. I didn't send this as a signal. This is just a personal trade because I'm not overly hopeful for it. James, do you think the rising price of oil will affect monetary decisions on the Fed or other central banks? No, I don't think so. Shouldn't buy or sell anything. Dollar yen. Yeah, Paris, exactly. I am fully out of the yen pairs at the moment. In fact, if you guys want to feel a little bit better, if you've been performing badly recently, look at my pound yen positions. So I took a short position here, stopped out, took one more long position right here and was stopped out. I took another long position and was stopped out. So yeah, I'm done with the yen for now. I've been on a bit of a losing streak on the yen, although oil's paid quite nicely this month. Is there somewhere you usually go for all these headlines? Yes, I go to the bank reports. I also go to free resources like investing.com, FX Street. You can also use Bloomberg if you want to spend a little bit of money. Bloomberg's quite good. Financial Times. You could also use Financial Juice. Let me pull that up actually, because Financial Juice is quite underrated. It's something that I don't really see many people using, but this is almost like a real-time news terminal, and it's completely free. You can pay for it, but I don't pay for anything. But yeah, this is quite useful as well to have on the side when you're trading. Hi James, do you mind sharing how much your highest drawdown is in every year in R&R or percentage? I'll be honest, I'm not sure what my highest drawdown is. I think the worst drawdown I've ever had was around 8%. And that was a bit rough. But I'm not sure what my average drawdown is on average, to be perfectly honest. I have a question about November. If the USA changes government and the new president wants to change the direction of the economy, how should we expect markets to behave? So it's between Trump and Harris, really. And I've been discussing this with some of my team, and we're not really sure what to do in terms of the elections, because Trump typically would be quite bullish for the dollar on the face value of it. And Kamala wants to bring in I don't really know exactly, but I know she wants to bring in quite a high capital gains tax. So it might be a case of just waiting and seeing. But yeah, I'm not here to try and predict the direction of the dollar on that one, unfortunately. Last H1 candle on WTI. Phantom, are you from the UK? Financial juice is the best. Sorry, guys. I know I've not actually done much on the charts today. So we're having a bit more of a conversation, I guess. GBJPY was a good setup. Swept Asia lows before London taking off. Yeah, I mean, I don't trade sessions, actually. Probably the only day trader that doesn't trade sessions. But yeah, it was just a rough period recently. Oh, she's cutting capital gains tax. Interesting. Real policies are made behind the scenes. Yeah, Bashi, I agree. Phantom is definitely in the UK. Rishi living in Ireland for a few years now, is he? Fair enough. Hi, James. What is the chart you are reading from? This one is pound yen. This one is dollar yen, but you know, we go through different ones. So let me have a quick think before I head off. I've got just about 4 minutes here. So gold, still looking to buy this. Unfortunately, we've still not had a valid pullback. We almost had one yesterday, or last week, or earlier this week, I should say. But yeah, nothing substantial, or at least nothing substantial enough to get in on. The Australian dollar, US dollar, still looking to go short on this one. I've just not had really any signals to get in terms of the technicals. The weekly looks great. We've got quite a strong resistance through here. We've just broken above the 200 weekly moving average. We're seeing some rejection slow down on this level here. So yeah, it'll be interesting maybe next week to see how this week's weekly candle closes. Maybe we could look for a short. Euro dollar looking to short. Copper, I'd love to get long on copper, but again, just not had much of an entry point. Pound dollar more on the sidelines, maybe looking for long depending on the escalations between Iran and Israel. Euro pound is one I really want to go short on. So you can see on the H4 here, we've got a really nice level of structure, looking for this break and retest to hit this 50% pullback level as well, to continue lower. And this is, as I said earlier, we've got relatively weaker Eurozone data. We've also got Bank of England holding rates. If we're expecting the European Central Bank as well to start cutting rates, that would in turn give us a central bank divergence there. And oil more sat on the sidelines for the long term. However, for the short term, obviously got a small day trade on, but yeah, overall not looking to really place a swing trade here yet. However, before we had the Iran-Israel news, I was more targeting the sort of $65 to $55 a barrel on crude oil. So we'll see. Maybe we can start heading there. But yeah, for now, more just waiting. James, James, been a pleasure. You've been fantastic. Appreciate you answering all the questions and giving us your opinions on the markets. Big up for it, James. Thank you, Bash. I appreciate that. What is the purpose of NFP? Why exclude the farming industry? How different NFP is than usual employment data? That is a good question. And maybe the next guest can get that for you, because I've got just about a minute left. So I don't want to get into something like that and then not be able to finish it. Lee James, was Joe just as good to trade under? Well, I'm not sure what you mean by it. If you mean the Joe that worked at Elite Traders, he's no longer with us. He decided to leave. But we were business partners. I wasn't underneath him and he wasn't underneath me. So guys, I'm going to head off. I hope you all have a great day and the rest of your week. I think I'm back on tomorrow, so I'll see you guys tomorrow. Don't leave. You've got another guest coming. So yeah, have a good day. I'll see you later.
If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show.
Alrighty, traders, good afternoon, good morning, good evening. Welcome to the live Wednesday show. And good to be here in the A1 Trading platform as we go ahead and take a look and see what is baking, what is shaking this morning in the market. The first thing I want to go ahead and do is just take a quick look at the calendar this morning, taking a look at some data that came out, and specifically the ADP numbers here for the US. And you can see right here, we did get 143K. That was a little surprise to the market that we're expecting 124K. And you know, I always look at the revised numbers right here, and I see that we're constantly having new revised numbers coming up. And so, you know, I got to think if someone was employed to do that job, somebody is fired. I mean, come on. Every week, every day, we get some new numbers, and it's always revised. It's like, could you not get this right the first time? I mean, how many times does it take for you to get this right? Anyway, it is what it is, and so we do see that there is this issue with regards to the data. But at the end of the day, the numbers did come out, and we did see a little surprise to the market. So because of the US data coming out, let's go take a look and see what the dollar's doing this morning. And let's go ahead and break this down, and we're going to look for some trade opportunities this morning as well. So stick around. We certainly want to dive into that. Now, I do see some questions coming up over here inside the chat. I want to go ahead and say good morning, everyone, and thank you. I do see some recommendations here. Aussie and New Zealand dollar, please. Yep, we'll definitely take a look at the Aussie US dollar. And so let me go ahead and firstly introduce myself. For those that don't know me, many call me the FX Big Dog on social media. So if you type up FX Big Dog on Google, you'll probably find me everywhere. We've got my own YouTube channel, as well as, of course, our company Traders Network Club has got its own YouTube channel. And so what we do is we provide opportunities, traders opportunity to be able to watch the markets, trade the markets with us. And we've got certain trading tools and strategies that we use in order to be able to implement some trade setups in the market. So I'm going to go through a couple of things here this morning. And yes, I will take a look at the Aussie New Zealand dollar for our trader there. And but I'm going to first take a look at the dollar right here. So let's take a look at the dollar. And as I look at the daily time frame right here, I'm going to pop the daily open right here. I noticed that the market set up this accumulation here, and we had a price manipulating down below. We came to this external sell side right here, and it really just tapped in. It didn't really trade through it, and we're now seeing price moving back up. So we're actually expecting the dollar to move back up towards this insufficiency here, around about 12,825. So we are expecting a bullish move in the dollar. Even though we are looking at the dollar and we're saying that the dollar long term, in our opinion, is bearish, but we are seeing the signs of the possibility of a rally in the dollar. And so let's go take a look and see what the lower time frame is showing right here. So let me knock it down to the 1 hour. And we can see that there was a low setting up over here. Price broke out of the high. We started seeing the market move bullish. We took out that high. So there's no doubt that we are what we refer to as on the buy side of the curve, which means that price is somewhat bullish at this point in time. And so we can now go to pairs that we want to go in trade that are traded against the dollar. And I did notice that we are probably going to be expecting, let's see here. All right, Well, I haven't got. It looks like we might be opening up with a bearish Dow as well, and that might just be another factor as well in the next probably about 10 minutes, 11 minutes from now. So I'll give you some information about risk on, risk off as the Dow opens up this morning, and we'll talk about the trade opportunities based on, risk off as well. And I'll explain myself when that happens. We do follow at Traders Network Club. We do follow a risk on, risk off trading strategy as well, which is based on the Dow's open, and we trade 16 currency pairs. We've actually knocked it down to 12. We've eliminated the JPY crosses for no reason other than nobody wants to really trade the JPYs. Like, come on. I mean, JPYs are, I think the JPY pairs are currencies from hell, and so we've gone in and eliminated those for certain reasons. Now, let's go, and some of you might say, well, it's pretty good to trade the JPY. It's got a lot of volatility, and when it moves in a direction, it moves. The problem is if you get caught up on the wrong side of the JPY, it can be pretty expensive. All right, so here we go. The US dollar CAD. Again, looking at, let's go to the daily time frame first. And if we look at over here on the daily time frame, we do notice that we came out of this accumulation. We had a little bit of manipulation to the top, so bear trap, bull trap, and then the market broke down to the downside right here, and we're chasing after the liquidity grabs down here. There's a lot of liquidity resting in at these levels. The market came just like we saw in the dollar rings. It came to this level right here. This is our external level, and price tapped on it and bounced back up again. So the question here is, are we going to see the dollar maybe go back up higher? I don't know. I don't think so. We had some strength coming out of the Canadian dollar yesterday due to oil prices pushing up higher. And so I still think we're going to get some additional strength out of the Canadian dollar. I don't think we're done with that yet. Now, if I look over here, and we can look at the Aussie CAD and New Zealand CAD as well, but if I look over here, we've certainly seen the market dealing with something here in the short term. So let's go down and take a look and see what's going on here. I'm going to zoom in here, and I'm going to take a little bit of a closer look here. I'm seeing an order block sitting over here. So based on this last daily move, we do have an order block sitting over here, and prices come close to that order block. I think we're going to probably go in and tap into that. You can see that we didn't really test that order block yet. And I think we're going to get another push to the upside here, tap into that, and then sell off back down south. Now, I'm going to move down to the 1 hour right now and take a look at the 1 hour. And so what's important on the 1 hour is that we pay a little more attention to what side of the curve we are trading. Now, traders, you can go ahead and put a trend line up here, and you can see that we've broken through the trend line, which is a good sign. Now we want to go ahead and take a look at the lows and highs. So if you look over here, we did create a high, then we create a higher high. There was the low. And so this creates a structure, all right? And it is a bearish structure. And we call this a market structure shift. And there's reason. Price already tapped into the daily order block over there at the top on the daily time frame. So I'm saying that we've hit resistance. And so there could be maybe another retracement back up here into this area. We can see that there is an order block sitting right over here. Actually, it's a breaker block. Breaker block sitting right over here. Price is going to respect that level, and then we're going to see price going back down. So there is this possibility for price to move back up. Now, the market moves in 3 phases: accumulation, manipulation, distribution. Doesn't matter what time frame you got. And so we're sitting over here inside accumulation. So which means that I'm going to be looking for a manipulation move. That means that it's a short-term move. It's not where the market overall wants to go. And so if that's going to be the case, then I can only think that this is going to be the manipulation move right here to this breaker block sitting over here. Price is going to tap into the backside of that trend line, and we're going to see an opportunity to go ahead and see distribution back down as it starts chasing after liquidity lows further down south. So I think we're going to get a nice little pullback, and this lines up with a beautiful bear crown right here as well, coming to the backside of the trend line. We had displacement below that low. This is telling us that a manipulation move right here should be short term, and then we should be seeing the market sell it back down south. Now, because of that, I'm going to actually go ahead and trade this. So let's go ahead and take a look at this. I'm going to go ahead and tap in here at this order block. So which means that I'm going to go ahead and place an order just about here. I'm going to go a little bit higher there. So at 35.17 is where I want to enter. I'm using the 1 hour time frame to go ahead and execute this trade. So what I'm going to do is I'm going to go here. I'm just going to go ahead and add in the US dollar CAD right here. Actually, we got an order in already. Let's just take a look at where the order is. So this is where we're sitting over here. I've already got a trade that's executed. And you can see right here, I've got a trade that's in already. My risk reward ratio on this is 3.4. So 1 to 3.4. So we've got a good trade already set up on this one right here. My stop loss is up at this area. I'm pretty comfortable with that. So if I do believe that price is going to come up a little higher here, let's see if I can identify. All right, so we're expecting price to maybe come back over here. I may even go ahead and look to re-enter on a new trade. So which means I could be expecting some further movement. So I'm going to do this. I'm going to go ahead and set up another trade on this. And I'm going to go ahead and do something like this. Let's just move the stop loss. I'm going to keep the stop loss right here at the original stop right there. And I'm going to go ahead and set that up. And then I'm going to enter here at this order block, so this breaker block entry. And I'm going to take profit. I'm going to move to the, let's see here. I'm going to move this up a little bit here. And I'm going to go to my daily time frame. And so I'm going to, on this trade, once again, probably go ahead. Let's just go back to my chart here. And let's see where I really want to go ahead and take profit. So we got an opportunity to take profit down here at 34.19. And that means that if I enter at that area, I'm looking at about 100 pip profit. My stop loss will be about 22 pips. That risk reward ratio is 1 to 5. Close enough. So so the lows right here is all I need. If I look over here, this is what the trade would be. I've got it set up here, and that is, let's see here. Let's go back to the 1 hour right here. Just lock in my entry point, which is about there. And yep, I'm looking at this now to be a 1 to 3.6. I want to get a little more out of that. So let me see if I can chase after a little more. So if I chase after the lows down here, I'm going to chase after the lows down here. I'm going to go ahead and extend this down here towards that low. What is that low at? That low's price is at 131.77. I'm going to lock that in, and I'm going to be able to monitor that. So this trade will be good. I'm going to go ahead and see if we can drive further down there. I'm going to re-enter it on the top here. So let me go ahead and open that order and look at the ratio. It's a 12.5 to 1. So that's a good ratio right here. I'm expecting price to come down. If we're going to continue to move back down, this will be my draw of liquidity down here. I'm going to go ahead and open up that sell, and I'm going to place that order. And so I'm quite comfortable putting this. I'm only risking 1% on that trade. And so if I feel like this could move to that level, it should be a good setup right here. So we're looking for price to move up to this area. If it does come back up to this area, I'm going to look for price to then turn around. My stop loss is above the highs right here. And if it doesn't work out, well, then that's fine. Then we'll end up taking a loss on that. But I can see right here, we are trading on the right side of the trend. We see that price can tap into the backside here. We've got a breaker block sitting over here. That breaker block is going to act as a resistance for us. And then we're looking for price to move back down. Now, I may end up taking partial profit down here at 34.18. So let me go over here and take a look over here on that order. This is the order right here. That's the trade. I'm going to go ahead and take partial profit. And the partial profit is going to be set up at a price. Let's go to, we're going to take 50% off the table, or maybe even 25, but let's go take 50% off the table. And we're going to take a profit based on price. And that price I mentioned was going to be right here at 34.19. So let's go ahead and add that in. So you're at 1.3419. Let's just try that again. 1.3419. That's going to be partial profit right here. And I'm going to take 50% off the table. So I'm going to go ahead and add that in. And there you can see there, partial profit at that level. And then we'll let the rest ride all the way down towards our target, which is all the way back down here. Now, what I can also add in here as well, I can also go ahead and say that when we take partial profit, let's go ahead and move our stop to break even. So I'm going to go do this. I'm going to put in at that price 1.3419. And I'm going to go ahead and at that point, I'm going to go ahead and set my break even. So I'm going to set the break even once price goes ahead and reaches my first target, which is the 34.19. All right. So when 34.19 hits, we'll go ahead and put our stop to break even. We'll take partial profit and we'll let the rest ride towards our target. All right. All right. So there's the, just give me 1 second here. All right, looks like my Alexa is talking to me here. All right, so there it is. That trade is being set. Now, there is someone that spoke about, let's take a look right here. Someone was speaking about Aussie New Zealand dollar right here. And so I'm going to go ahead and place 2 trades this morning. I'm going to put additional 2 trades here, pound on the pound US dollar as well as the Aussie New Zealand dollar. So I'm going to go take a look over here. I'm going to show you a short-term trade opportunity. So number one, traders, so the market moves in 3 phases: accumulation, manipulation, and then distribution. If it's going to manipulate, we're going to look for the market on a higher time frame to come to some sort of PD array, right? Whether it be insufficiency, rebalancing of equilibrium, or maybe just filling in a order block sitting over here in this area. So what I'd like to do is go to the larger time frame and take a quick look at what's going on here, the larger time frame. So here we go. So we had price, and it's all about structure, right? Price goes up. We did have the accumulation right here. Now we're going to look on the left-hand side right here. If I look on the left-hand side here, I don't see any sort of PD array that could hold the market back. So which means I'm expecting price to continue, and that is the draw of liquidity over here. So based on this, once we get to this point, we may end up seeing some retracement move to the downside. But until then, this is telling me we're still heading north. And so I'm going to look at my FIPS going up from here to there. And I'm going to say that price is probably going to find some sort of rejection here as we get closer to that 1.618. So we could say that the Aussie New Zealand dollar will remain bullish. And therefore, I go to the 1 hour time frame. And I look at the 1 hour right here. And there's that same Fibonacci level I put in here. And then I'm going to look over here and I'm going to look at these short-term moves. And I'm going to start talking about the internal structure, right? So yeah, we have an internal structure. And so traders, look over here. This is vitally important right here, right? You would not have seen this if you didn't go into the internal structure. Take a look here. Prices come to the 1.618. Now, why is this important to me? It's important to me because I understand price action and the market moves in these 5-wave structure. Once price completes a 5-wave structure, then what we tend to see is price move back down, take out the 4th wave, and then start all over again. All right. And so when I look at this, I see this as a wave 1, wave 2. Here we are in wave 3. This is where I'm anticipating my target. And so I look at this, I go, hang on, we had accumulation. Here's manipulation to a 1.618 extension. Now I'm expecting price to come back down, sweep the lows, and then go back up north. And now create this law of this 4th wave right here, and then a 5th wave up here at the top. So actually, Aussie New Zealand dollar in the short term is a short-term scalp to the downside. So what I'm going to do is, and by the way, if you go to my YouTube channel, inside the YouTube channel in the description, there's a Telegram channel, FX Big Dog Telegram channel. And so what I'm going to do is I'm going to go ahead and place this trade, and all these trades are going to be sent to my Telegram channel, and you can follow along the way. So what I'm going to do is I'm going to go ahead and sell this trade right here, sell the Aussie New Zealand dollar, and all I'm looking for is just a 20-pip grab on that trade. That's all I'm looking for right here. All right, small profits, and that's all I need. And there you can see here, there's that trade that's been implemented. There it is, tells the price I entered, the sell, and the time and date. All right. And so it's been implemented. And so let's go ahead now and take a look at the next setup. I would like to go ahead and take a look at the pound. Here's the pound US dollar. All right. Now, on the pound US dollar, we may see something a little different, but let's go to the larger time frame. All right. And let's go ahead and plot this over here. So here's the daily setup. And let me clear up this. Some of the stuff, you know what? Let's clear up a lot of the stuff. Let's go ahead and do some housekeeping here. All right, so the first thing I want to take from this is I do recognize that there is accumulation here at the top. And price is now moving south, and it's going to come to either rebalance or it's going to tap into this order block sitting over here. We can see that we've tapped in already a little bit there. But it looks like we got some further downside movement. Now, if I look at the daily, my directional bias at the moment right now would be bearish, even though it's a correction move. And it's going to come back to retap into this order block right here. So which means I've got to go down to the lower time frame. And what I'm trying to establish here on the lower time frame is, do I have the market still on the south side of the curve? And you can see right here that we have the market creating a high. We had a new high being created there. The market broke out of that low, and we had accumulation sitting over here. So price is looking for this low, which it did tap in there. And so this means that we could get another retest of this low, get to this order block, and then start working its way back up north. So which means we have a short-term opportunity where price can move down another 44 pips before price jumps back up again. So because of that, I'm going to go ahead and short the pound. And we're going to short the pound, looking for just a 20 pip grab right there. There you can see the trade's been put in, pound US dollar. There's the entry point, time and date. All right. And so I'm going to look for price to go ahead and sweep that low and tap into this order block. And then we're going to see a bit of support right here. So we still have some momentum to the downside. Now, let's go ahead and say, what happens if price goes back up again? Well, we've got resistance here, and there's a possibility that we could want to go ahead and trade up a little higher. There's some room for price to move up a little higher, and I'm okay with that. I will re-enter multiple times because I'm expecting the target to be down here. This is where my buy zone would be at right here. And so, yes, there could be a sell zone up here as well. All right. And how I know that this is a buy zone and sell zone is very, very easy. Is because there's liquidity resting on those highs and lows. Therefore, there are sellers at this point and there are buyers at this point. And when we say that, this is actually buy stops resting at that level, and we have sell stops resting at this level. And so price moves with 4 reasons. There's 4 reasons why price moves. Number one, to rebalance equilibrium, rebalance insufficiency, create liquidity, or even hunt for liquidity. So in this case now, we're hunting for liquidity, which could be either down here or up here. We know that price is going to come to those levels. I do recognize, for those that know, that we're inside accumulation. So the reason why I'm saying that there's room for price to move here is because if price is going to manipulate, it may be up here, manipulate, and then distribute back down to this level right here. And I'm okay with that. And that's why I use a different type of strategy based on this model. So when you have these type of models, you've got to be able to be more flexible in regards to where your entry is going to be. Because if I entered here and I put a stop loss right here, then really, traders, what I'm becoming is a retail trader. And I'm putting my stop precisely where precisely where retail traders would place their stop losses. And that's where you'll have your stop hunts, right? And so I'm going to go ahead and keep it there. And let's see if this works in my favor, all right? So let me go ahead and grab a couple of questions here. I've got probably around about 7 minutes left before we bring on the next guest. And so let me go ahead and grab some questions here. It's a break and a retest of every one. All right, let's take a look over here. That's not a question. Let me see if there's another one. Why is he telling people to go short on the US dollar? Okay, all right. All right. Let's go ahead and address this question. All right. So the trader says, yeah, what? I don't know. Why is he telling us to go short on the US dollar, the US dollar CAD? Why would he even say go short on the US dollar CAD? Well, traders, remember something. First, number one, remember, could someone, and let me ask you the question, could someone be long and someone be short and both right? Is it possible that someone could be short on US dollar CAD and someone could be long on US dollar CAD and still be right? Is it possible? If go ahead and post over there. No, and I'm not talking about hedging. I'm not talking about hedging. I'm saying, could it be possible that someone would go short on the US dollar CAD and someone go long on the US dollar CAD and both be right? Now, if you answered yes, then you're right. You can be long US dollar CAD and you can be short US dollar and both be right. What's going to define whether you're successful or not is what's your strategy, what time frame you're trading, where's your stop loss. All of that stuff is what counts. All right. And so remember something, traders. If I'm saying I'm short US dollar CAD, I don't even want to hear and see questions like, why is he telling us to go short? Because if I'm going short on a particular pair, it's because I have a plan. And let me go ahead and give you my 2 cents. Now, you don't have to agree on it, and that's the beauty of trading, is that you can do whatever you want to do. But what I'm going to do is I'm going to give you my 2 cents of why I expect US dollar to go back down south. Because traders, what we have to establish in the market here is draw of liquidity. And once we understand where the market's going to draw liquidity, we need to then establish, are we on the sell side or the buy side of the curve? Now, there's multiple time frames. Every time frame will tell you something different. As an example, the daily time frame, bearish. So we're on the sell side of the curve. On a 15-minute time frame, maybe even a 1-hour time frame, price action is moving bullish. All right. So which one's right? Do I buy or do I sell? Well, that depends on your strategy. What are you looking for? Well, in my case now, I identify that the draw of liquidity is further down south based on my larger time frame. This is where the draw of liquidity is. Let me go ahead and put a price target there, 132. All right. So if this is the draw of liquidity, then I'm expecting the larger time frame to end up at this area right here. But in the short term, price is moving up. All right. And it's correcting itself. What is it doing? It's coming back to resistance. And so if I establish that price is at resistance and that I'm expecting price to now start reversing and I see signs of that, I'm going to take these opportunities because what is my risk reward ratio? 1 to 12. What does that mean? That means, traders, that I could be wrong 6 out of the, in fact, I could be wrong 8 times on that particular trade and still make good profit if I've got a risk reward ratio of 1 to 12. So I could be wrong multiple times. So why if I see an opportunity, don't take it? You see, the problem here is, traders, a lot of traders are focusing on the money, right? And so they're blinded by the fact that there's opportunities there with good risk reward ratios. And so what you need to do is you need to take on the opportunities and don't try and cuddle the trade. Be aggressive on your entries. Be aggressive. Have good equity management, good risk management, but be aggressive. If the market's in a downtrend overall and you see prices retracing back up and you see reversals on the low time frames, take the opportunity. So what if I'm wrong 3 times? As long as I'm wrong right once and price moves to where my target is anticipated, I'm making a 12 to 1 risk reward ratio. It's a profitable trade. All right. Now, I do believe that there's 2 ways to trade the market. All right. 2 ways to trade the market. There is short term, which I call my bread and butter trades. And then, of course, there's long term or mid term, which means that you're going to trade for longer and larger profits. Right. And those are called jackpot trades. Right. So I know my time's run up. I've got about 2 minutes left, but I want to end up with this. I believe that US dollar CAD is still overall bearish, right? Here's US dollar CAD. So US dollar CAD, here's the daily time frame. I believe that US dollar CAD is still bearish overall. We have maybe a short-term rally here, all right? But we're on the south side of the curve. I see a draw I see my draw of liquidity all the way back down here, actually at 31.77. I see some internal structure or internal liquidity here that price is going to draw back down. All right. And so therefore, traders, I'm looking for every short opportunity that comes out on US dollar CAD, and I'm going to short the market to the downside. Now, if I'm wrong, I'll get stopped out. But if I'm right once, I'm going to be okay. I'm going to apply good risk management on these trades. And if I'm right, I've got a 12-to-1 risk reward ratio. Why would I be upset about that? Okay. All right, traders. Now, big dog, these levels don't matter. Let's see here. Don't matter if fundamentals are stronger this week. Listen here, let me tell you this much. Okay. Fundamentals, and some people may disagree with me. I've been doing this for 30 years, so I'll know a little bit about what's going on. So, and I'm going to say this. All right. If you take any strategy and you go back on any strategy, and this is what you do is you build strategies out, right? You go back, let's say 4 years, 5 years, and you start doing some paper trading. You start testing the system out. You start testing your strategy out, right? When you go back and you do some paper trading, you test your strategy out, and you go ahead and you mark off my entry, my stop, and you work, and you go after 4 years, you go, man, the strategy has been successful. Have you considered fundamentals during your testing phases? No, but yet the strategy played out. You see, too many times we get ourselves confused by fundamentals, technicals, this, that, and sometimes we sit watching the market more than we actually following the process. Sometimes you just need to be committed to the process, all right? Instead of getting yourself all, sort of like drilled in with, or at least filled in with all this information about, CPI came out, jobs came out, this jobs showing this, jobs showing that. We got some war in Israel. This, I get it. There's some flash news that comes out, and the markets maybe move a little bit different than usual. But in most cases, when you're on the right side of the trend, you're in the right direction. All right. All you got to do is look for entry points. And so when you're going through that back testing, you never considered fundamentals at all. You just looked at technicals and you followed the process. So all I'm saying is, let's just follow the process. All right. And if the process doesn't work out, meaning that we get stopped out, then you just reevaluate it and follow the process once again. Just commit yourself to the process, my friends. All right. Okay, traders. With that being said, listen here. The beauty about trading is nothing I say today has to be followed by you. This is my 2 cents. This is my opinion about the market. This is how I read the market. And if you disagree, that's okay. Good luck with your trading. Have a fantastic day, and we'll see each other next time. All right. So with that being said, traders, love you guys, and I appreciate the comments. Listen here, whether good or bad, whether you arguing the point, where you disagree or agree, it doesn't really matter. The most important thing right here is, did you get some information from this? And if you did, well, then I guess it's been a good day today. So with that being said, traders, have a fantastic afternoon. We'll see how this plays out. Hopefully, I'll be on the A1 trading next week, and we go ahead and talk about this and see how the US dollar CAD actually worked out. So thanks, guys. Appreciate you. We'll see you next time.
If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out, in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show. All right. Hey guys, welcome back. Hope you're doing well. Filling in here, we got our next guest coming in just a few minutes. I was just doing some trading stuff anyway, so I'll pop back in the stream for a few minutes. Also, so we saw a bit of a move here lower this morning, kind of a weird couple candles here on the NASDAQ. I am long the NASDAQ. I'm also long the Russell in a weird way. So I bought IWF, which is a Russell 1000 growth ETF. And this move hasn't really gone anywhere yet. I took the trade yesterday. Just an ETF that I'm trading. And I was also looking at, I'm just literally going through my process here this morning, and I'll just do it here on the stream. I sold so many puts yesterday, and this is kind of like a big component of my trading performance is my options trading strategy. It is quite conservative. It is quite boring, and it is something that I've done for some time, and it helps to smoothen out the equity curve. The reason, what I mean by that, smoothing out the equity curve, this is strategy. This is the primary strategy that I do on my trading channel or on my YouTube channel all the time. Is I have small losses and the occasional big exciting winner. And I'm not going to lie, from a content perspective, this is so much better. I have periods of time where I have this awesome, exciting trade and everybody thinks I'm a hero. And then there are periods like this where people say I suck at trading and so on and so forth. And I really don't care. This is just what I do. This is my momentum trading style, and this is my equity curve. So this is what my trading account generally looks like. I have slow periods and then big, winning trades that will come every once in a while and take the account higher. Now, here's the cool thing. I have an options trading strategy, which is incredibly boring. Both of my strategies are boring. That's how you know they're sustainable. They don't make you rich quick or anything like that. But the options trading strategy that I have looks a little bit more like this. And what I mean by this is I take periodic, bigger losing trades that I have to deal with in exchange for a very high win rate. And the reason I showed you these two strategies mapped over each other is because what it produces in my trading account on the overall basis. I'm going to find another color. I need another color to mix in here. We got green, yellow, we got all the main colors. Let's do white. Is it produces something like this. Not a fast up and to the right result, but my equity chart, by combining two trading strategies, helps to smoothen the trading returns that I produce. Also, just a heads up, hope you guys enjoyed that session with FX Big Dog, Mr. Gary. Him and I have collabed in many ways, many times over the years. He's one of the few traders I think has possibly a better trading desk background. His setup, I was admiring his setup. It looked really cool. Hope you guys enjoyed that. If you didn't already, can you guys do us a big favor? Go support Gary. We'll drop the link to his YouTube channel. If you enjoyed his commentary, the thing that I appreciate about having Gary on the show, and I am glad to see him coming back on the show, is we're such different traders. And that's the best part about these types of shows. You get traders that are different. Gary is more, he's more of an FX trader than I am. He also, is more of a technical focused trader than I am. He's also, he uses a good combination of Elliott wave concepts. And he also, I believe, is also getting into some of the liquidity studies that are very popular as well. And so you get into all that and you say, well, Nick, that's a different trader than you. But that's why him and anyone else who trades differently, who can prove it, by the way, is welcome to come on the show. Gary has dropped 1,000 MyFX books over the years showing, that he actually trades, that he actually does what he says. So huge respect to Gary. Glad to see him coming back on the show. And do us a big favor on the A1 Trading stream team side of things. Make sure to go support our guests whenever you can. It does invite them to come back if they see good growth on their own socials because of coming on the A1 Trading Show. They're more likely to come back, and it's a mutually beneficial thing. They gain exposure, you guys gain value, and the A1 Trading Show gets to put out a great show every day that attracts traders all over. So yeah, really important to basically bring on different thoughts, different traders. If somebody can prove their trading profitability, that's all that matters. And Gary has done that. All right. So anyways, I wanted to wrap up that thought on this concept here of combining two trading strategies has been a very prosperous thing for me over the years. It doesn't make me money faster to have two strategies because I split my trading capital that way. It doesn't make me money faster to split up my trading returns smoother. And that is what matters for me. Everybody has different goals. Some people can stomach the bigger swings in their account. I don't want to. My goals in the market, everybody has their own goals in the market. My goals in the market are not to make money quickly. It's to stably make money in the markets, and selling puts is wonderful for that. So I've sold a bunch of puts yesterday. Couple stocks that I like. Amazon. I sold puts on Amazon yesterday. We're up a whopping $27 on that position. So it just hasn't moved, but that's the beauty of options. The market, if you're selling options, doesn't even have to move and you can make money. So that's the cool thing about the option side of things. In terms of the indices this morning, they had a little bit of a slip on the opening gate and then a little bit of a bounce. We'll see if that bounce can sustain itself. US 30 is up higher. Russell is up higher. The Nikkei making a little bit of a push, and China up 5%. I mean, it was up 8% when I woke up this morning. And I sent Frank a text message right away. I said, my text said an entire one word. It said China. And then he liked the message. And if you're a trader, you don't even have to say, usually it's one word, like Euro USD. You text it to your trading buddy and they're like, yep, exactly. That's all it takes. Frank is my my long-term trading buddy, and we've stared at markets together for most of our lives now. So anyways, guys, we got our next guest coming on the show. You guys got Gary first. Maybe you get the younger version now. We get Cameron. So we got Cameron joining the show here in just a moment. We're going to take a quick break, and then I'll say hello to Cameron right after this. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show. All right, and we're back with Cameron. Hey, Cameron, how you doing, man?
Hey, how you doing, Nick? I'm doing good, man. First time seeing you. So
yeah, I know it's nice to meet you here. I've done stuff like worked with your dad back and forth for years, so it's cool to meet the prodigy now. So welcome back to the show. And I saw I was out of town last week when you guys when you first joined the show, but I did watch some of your commentary and it was super insightful. So good to have you back on the show.
I appreciate it. Thank you for having me here, man.
Yeah. Well, Cameron, I'm going to let you take over the show as you do usually. I know you're more on the ICT kind of stuff, which is exciting and brings a new dynamic to the show. Before I let you take over the show here for a second, Cameron, I just want to mention, in the trading world, there's so much like drama around the ICT stuff, but I go back to what I just said about your dad just before you joined. I was mentioning that Gary and I, your dad and I, have a very different trading style, but we both, have found what works for us in the markets. And at the end of the day, I think that's all that matters. Whatever works for the trader, whatever works for you is what matters most. So I don't know if you feel the same way, but of course there's always like the heated, like this doesn't work, that doesn't work. Yeah. But at the end of the day, who's to tell you whether you're making money or not,
Yeah, exactly. I mean, I think I tell a lot of my VIP traders that, the technical part comes easy. There's many ways how people trade. A lot of people have different ways of how they look at the chart technically. But I always say 80% of trading comes, psychologically. It's more mental than if anything. So, yeah, no, absolutely. I agree with that.
I definitely think so too. Like I think like most trading strategies could be made to be profitable if people are able to like stick to a rule set, stay properly managed on the risk side, and just take the slow and steady approach. So we're definitely on the same page there. Cameron, I'm gonna give you the show here, so I'll back out, and you got the screen here, and you can go over whatever you'd like to go through, and then whenever you're done, just let us know. We'll shut down the show.
All right, appreciate it. Thank you.
All right, thanks, Cameron.
All right, thanks, Nick. All right. Welcome back, guys. Good to be back. So let's go ahead and break down some pairs. I'm going to take a look at some Forex pairs. We've had some positions that we took this morning. We just closed actually the US dollar CAD. So I'm going to take a look at the US dollar CAD, and then I'm going to go back to futures. I'm going to take a look at NQ and ES and see how those are looking this morning as well. So going to the US dollar CAD, I'm going to go to the daily here. And I first want to give you the external bias here. For those that watched me last week, I go and I break down the higher time frame, look for that external bias, right? Because for those that don't know, when I trade Forex, it's different how I trade futures. We use a dollar cost averaging approach to the market, and we go ahead and we dollar cost average with the external model, okay? And we use market maker models, the buy and the sell curve, to go ahead and find those entries. So giving you the external bias here, I did mention this last week when I was on the show that we had buy side liquidity swept, and then we had this expansion move below these internal lows here that gave us a change of character in the market. This is what we call a change of character, market structure shift, whatever you want to call it. It just indicates that we're seeing a reversal in the market, right? Price is starting to change character, meaning that we're not bullish anymore. We're looking like we might be moving bearish. So because we've seen this displacement through these initial lows with displacement here that confirms a market structure shift, I'm looking at sell side liquidity to be now the draw, meaning that that's where price will draw to, the draw of liquidity, right? Where is the rest in liquidity that price will draw to? So looking here, I marked out these initial lows here. This is a low resistance liquidity run that I expect price to run through all those resting liquidity areas. And then we can always take a look at the external, right? The external liquidity range. We could look at this external range and then this external range, right? This could where price want to continue to move to. Now we're looking at the higher time frame, so there's always wave structures that price moves in, right? We don't just get one swing to the downside unless we get some maybe news drive in the market. But other than that, we're going to see some manipulation to the upside, and then we can also see a run to the downside. So right now, when we're looking at the market, we had the retest. This was the weekly order block that was respected as support. We had displacement. That was a change of character. We had the retest back to that internal liquidity, respected that. More bearish sentiment. So coming into this morning, what we looked for, okay, this blue box right here, I'm on the 4 hour. This blue box right here is the daily buy side imbalance, which is this one right here, this move that we had. And we can see price respected this, right? Price came back, respected it. There was the sell side insufficiency that was created to this internal liquidity. So I told my students that we had a run to internal liquidity. Anytime we have a run to internal liquidity, that can indicate this is a run of sell stops. So when we run sell stops, we expect price to push higher. Now we have to pay attention to that insufficiency that price created to this run. Okay, this is how you understand price action. This insufficiency becomes a key area of support and resistance. It hold as resistance. What did price do when we came into this sell side imbalance? Not only we respected it, but we displaced out of this area. And then we displaced through this buy side imbalance. Once again, that confirmed again, we were bearish. So we took sells all the way to this internal sell side. Now we had another correction. Price came back to that inversion, respected, checked. Now we can say, all right, if we want to continue to run bearish, as we looked at the daily with all this resting liquidity below, if we want to continue to run bearish, we need another run to internal liquidity. And now we have another internal model to trade. This is buy side of the curve, sell side of the curve, internal low, right? And we can see price run lower, but we're just targeting the internal liquidity ranges, okay, using the external bias. External bias is bearish, Now we have an internal liquidity range setting up. So here you look and you see there's the insufficiency that price created as it ran to internal liquidity. We've now ran through this area. We're starting to run through it. So we took sells this morning. We just closed out. As I was anticipating going to the 1 hour that this was going to be respected. I thought maybe it would sweep the internal low. I like to see this buy side get swept and then run lower. Either way, very bearish here on the US dollar CAD. Still want to see price run a little bit lower. See, we have these order blocks right here. This is where resting buy stops, sell stops are at. I want to see price run lower than that. If we can run lower than that, then the sell side becomes to me the confluence draw of the internal model. But other than that, once again, still pretty bearish, and we just closed that out. Okay, so US dollar CAD bearish. We closed those positions out. I did also have a Euro New Zealand model setting very nicely here as well. We've been taking sells here on the Euro New Zealand. So I'm going to show you the weekly year and how we've been trading the internal model, okay, or the internal liquidity. For example, like I've been saying, we like to trade the external liquidity, but here on the Euro New Zealand, we've been trading the internal liquidity, and I'll show you why, because this is a turtle soup setup. What is a turtle soup? A turtle soup is once you find the external model, is sell side, buy side. This is the external model, right? To this external buy side liquidity range. So if we're continuing to stay bullish, any moves that we run to the internal lows or internal liquidity to the downside will indicate that we're running sell stops and then pushing price higher. This would be a turtle soup setup. Okay, we run to internal liquidity before we run to the external. So looking at the weekly, here we have range bound support and resistance. I still believe we're continuing to move bullish, but these equal lows become a internal liquidity grab. Let's go to the daily. I'll show you. Here, equal lows. Equal lows are very important to me when I'm looking at price action because those are magnets to the market. That just gives you more confluence that there's more resting liquidity in that area when we have equal lows. It's generated liquidity. This is all generated. It's algorithmic, okay? So what we have here is now the draw of liquidity, these equal lows. So once again, turtle soup, bearish to those equal lows. And we've been now taking opportunity of sell opportunities of price on this downswing to these equal lows. Once price sweeps these equal lows, I'm going to be looking for some sort of change of character to confirm with my external bias that we're bullish, right? So looking again here, let's go to the 4 hour and how this model was set up. So first thing, this was the higher time frame buy side imbalance, okay? What did price keep doing? Once we swept that buy side, price kept coming and retesting it, okay? Retesting that buy side imbalance. There was no confirmation that we've seen a reversal in the market until price runs through these key areas of insufficiency. What then happened was we ran through it. So a lot of traders say to me, hey, Cam, you know, you're looking at this model right here, this buy side, and then you're looking for the sell side to this external. You're looking to take sell opportunities. Once price ran all the way here, we're pretty close to this sell side opportunity. So we're only now looking for sell opportunities from here to there, and we've missed all this range. And I would say to them that there's going to be a lot of manipulation here. If you're running sells with stops, you're going to get manipulated in the market until you get confirmation. Wait till the market tells you to get in. And I'm telling them, you're going to get a lot of setups in this area. And as you can see here on the 4 hour, once we had confirmation that price ran through this, we want to wait for price to run back to internal liquidity. Let's wait for price to run buy stops before we want to see price run lower, because price is not going to run lower until we run that rest in liquidity, which is buy stops in this regard. So price comes back into this higher time frame buy side imbalance. which now plays an inversion, a fair value gap. I think someone just said that. Lee James, a fair value gap. Thank you for putting the description there. It's a fair value gap, which is insufficiency, buy side imbalance. Price runs to that, becomes an inversion, just like support and resistance. Price runs through this area, which is supposed to play a support, but it runs through it. Now it's going to play resistance. Okay. So then we had price come back to this area. And then we wait for more confirmation here for the internal model. Now we have the internal model. And this is what we've been trading. Here it is. Sell side, the internal low. What did we wait for? Here's the insufficiency that price ran to that internal model, right? Go ahead and mark this out. There it is. When price runs through this insufficiency, comes back to retest it. There's your entry. Then you get the expansion move to your sell side liquidity. And that's a sell we've been taking on the year in New Zealand. And I'm still bearish. Because why? I'm looking for price to run to this equal lows. So what do we have? We had run to this internal. This internal model has been completed, right? Now we're looking for maybe another run stop. Do we get another run stop to go ahead and trade another internal liquidity? Possibly, because the external still lines up that we're running to these equal lows. So we're using that to our advantage, to more opportunities, more models, more opportunities, right? So those traders that are saying we ran so low already to the sell side, we're only going to be taking sells here, we're waiting for the model to set up, right? We're waiting for the model to set up, and we're taking advantage of this. And this is a lot because we're only looking at the 4-hour here, so we have a lot of room to trade. Okay. So that's another pair that I'm very bearish here on the euro New Zealand. And then we've also been trading the pound US dollar. Pound US dollar is very bullish. Okay, I caught a turtle soup here in the pound US dollar. Let's go to the pound US dollar here. Where is it at? Okay. So you're on the pound US dollar. We had this internal model again. And where are we moving to? Equal highs. So external is bullish. We're going to wait for a run stop. Right? Wait for a run stop. We could possibly see some change of character here. Look at the 4-hour. Look at the 4-hour. Looking at this model right here, what we have. Price displays through these internal lows, through these order blocks. Okay? I wouldn't say this is a run stop yet, because if we go to the daily, where's price running to? Could be this order block. Okay? Price runs through this order block, then we're running to this initial low. Because what does price have to do as well? It has to rebalance, right? Look at this expansion move we had. Here's our equilibrium of this price leg. So because my equilibrium is sitting at this initial low, this could become sell side. Because we need to rebalance the market. We had this expansion move. Equilibrium is 50% of that price leg. So if I'm looking for this to be the sell side, if I'm trading this internal model now, which I don't like to trade, this would be now trading the internal model. I'm trading the sell side of the curve here. I want to trade the buy side of the curve. Why? Because my external bias is bullish. So I'd rather wait for a price to run to internal liquidity and then trade back to the buy side, initial high, because my external is bullish. But I'm just giving you understanding of price action here. What do we have? Displacement. This could be a market structure shift. What I want to see is maybe this insufficiency or this breaker. Can even use this inversion as well. Price is going to run up somewhere in this area. And I'm just marking these areas because I'm looking for where is price or where is liquidity resting. That's the most important thing I have to ask myself when I'm trading price action. Where's the liquidity resting? Because that's where price will move to. And I'm looking for a possible retest. If price comes back here on the pound US dollar and we respect somewhat in this area here and we displace out of this area, then we could start looking for this equilibrium move. And this initial low could be a key area, because when I see internal lows resting in higher time frame insufficiencies, those become a key area that price will draw to. Remember that. Internal lows, internal highs, resting in higher time frame insufficiencies become very drawable. Okay. All right, so that's pretty much the Forex pairs we've been looking at and taking advantage. I mean, we look at a lot of Forex pairs, but I'm not going to break down all 16 of them. But those are the three right now that we've been taking some nice trades using these external models. I'm going to go take a look at NQ and ES to go ahead and finish this off. Gonna adjust my Excel sheets with fundamental data, not listening to this nonsense. ICT is boring. Everyone talks about it. I just fall asleep. Boring. All right. So someone doesn't like ICT. Guys, it's not ICT. This is price action. It's smart money concepts. It's ICT concepts, but you have to understand price action. Now, look, everyone trades different, right? I've done all the trading you could possibly think of. I like ICT. Reason why is, to me, understand price action is the most important thing when you're trading. If you don't understand price action, it can be, to me, when I didn't understand price action, it can be very inconsistent in the market. So some people might find it boring. I find it actually fascinating. I find it very, exciting. Understanding price action. But maybe a lot of you guys listen to Inner Circle Trading, and sometimes when you listen to him, maybe you can kind of be against it. What is your returns and percentage and average on a monthly basis? You can go and check Profit Pathways. That's your name. You can go ahead and check out our tradersnetworkclub.com. We have all of our information there. We average with different strategies. We average anything from 5% to 15%. We've had months where we do more, but anything around an average of 5 to 15% monthly. All right, so take a look at NQ here. Gonna go look at the 50-minute time frame, and I'm gonna pull up ES as well. So here we're starting to see a smart money reversal. It hasn't been identified, but we have an SMT here. ES is taking out this low, as you can see. We're starting to see pretty strong movement here. I'm gonna go to 15 here on the ES to see this better. Okay, there we go. So there we go. ES took out that low. NQ never did. NQ showing weaker. We had this run again. So I'm gonna go to the 1 minute here. And it was kind of missed this opportunity this morning. There was the run. So we had an SMT. Anytime we have an SMT and we see displacement through this order block, there was your reversal. So we had a reversal market structure shift here. SMT, displacement through an order block. There's your market structure shift. Same thing, concepts. Have to understand price action, right, Chosen? So looking at this, you can go to 1 minute. Fair value gap. This is where the rest of internal liquidity is. Price will run to this internal liquidity. And then we could have, I would have probably taken partials here and then target this high right here. Okay. Once again, price is respecting it again. We can always get some sort of manipulation, so keep that in mind. Price is respecting bullish PDRAs. And then this would have been the model, the external model here. I'll have taken partials here, and I'll be looking to run more contracts to this high right here. This would have been my buy side of the curve. Now that I'm not in this trade, let's say if you're not in this trade right now, I'll wait for a run stop to internal liquidity. Where is my internal liquidity? Well, internal liquidity would be here and here. So if price runs to this internal liquidity, maybe we run to these order blocks, or if we run to this insufficiency here, if we get some sort of run before sweep in this area, this would be a turtle soup setup. We now have confirmation that we're bullish is bias, and now we're waiting. If we didn't get in at the time we should have gotten entered at, then we wait for a run stop to internal liquidity, and then wait for that to now change character. Then we can go ahead and target that external buy side. Okay. Probably going to see
Cameron,
all the way to that buy side liquidity though. Hey, how you doing, Chandler?
Hey, I'm here to let you go. That's I'm setting you free.
Just send me home. All right.
But we appreciate you coming on, and we'll definitely be asking you to come back. And guys, I've been putting Cameron. He's with Traders Network Club. Links in the chat. It takes 2 seconds, maybe not even that, to click on the link, subscribe, and then you get more of Cameron. But Cameron, thanks for coming on.
All right, appreciate it, man. Appreciate having me. I'm always happy to be here. So anytime, man. Appreciate it, Chandler.
All right. Well, we'll see you next time. And guys, we're going to move the show right along to Chris Pulver. So stick around. Chris Pulver right after this.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? How we doing? I'm just getting my update here for Nike. Nike was entered in at a 560 debit. I talked about doing that trade yesterday, so I did. I posted that in the Discord section for my Chris's Trades, Pulver Alerts. Entry was 560 debit, closed for $6.75 or better. And that's about a 20% return on capital. So that trade is done. I want to show that trade right here. So Nike, we're trading at 82.71. We have a little bit of an indecision on the day. When I closed the trade out, we were, let me move this over just a tiny bit right there. So as price was pushing down near 81 and change, I did get that trade to close out. I can show you that right in here. So if I go to Nike, you can see here trade was taken. Let me go to this account. Nike 670. If I go to the order history, let's see here. Nike. That's so weird. Oh, I need to go. Really? Like the last 7 days? There we go. I don't know. It's not showing the debit in here, but it was a 560 debit. Let me see if it shows it in another account. 670, 669. That's so weird. Here we go. Here's okay. So I took the trade. It was 567, 568 debit. It's closed it out this morning. 669, 665, 670, 675. I think 680 was my best fill this morning on one of my accounts. So anyway, Nike's closed. I updated here in my trade section. So under the stock option trades for my Pulver Alerts, update right here. Entry is 560 debit, close 675 or better, but a 20% return on capital. And there was a trade that I posted with the earnings report. I want to see what it's trading for right now, just in case if we're looking at it fresh, what would this trade be looking for right now? If I go similar order, it's profitable, not as much. And again, I would say at least consider a break even or better. I would consider a break even or better. I mean, otherwise you're going to have to wait for price did what it was supposed to do, right? I mean, we had a center price around 89. We moved all the way down to about 81.79. Let's do the math on that. So let's say our center price around $89. $89 and current price is 82. 82.86 was about a $6 move. We were looking at about an $8 move based on our expected, market maker move and implied volatility plus previous earnings reports. So anyway, that was Nike. So I'm out of the trade. Grabbed about 20% return on capital, not too shabby. I have a couple trades still going on the SPX this morning. Price is cooperating. I want to take a quick peek at those. Go to the broker platform, go to SPX. So this account right here. Right now, let me check these. 350 trading for 325, 365 trading for 380. Just going to keep monitoring those for the morning. This one's looking pretty good for a profit, hopefully coming in soon. This one, same thing here, need a little bit more time decay. So I'll keep an eye on this one. Price action wise today, we came up to have a gap fill. So we pushed down towards yesterday's lows. We just kind of poked yesterday's lows, came back up off these gamma squeeze levels, filled today's gap. And I'm looking to see if price will just kind of hang out in here. So pushing down, pulling back to the gap fill. Let's see if price just kind of stays here, or if there is some type of like aggressive movement where maybe we retest the lows again and it just becomes a little choppy. So I'm going to keep an eye on the SPX this morning and see if we get back into 56.95, 56.90. I should have a couple more trades closing out for profit on the SPX. So I do have those already running. I'm just going to kind of keep spot checking these as the morning unfolds. So I will watch that. Hopefully in the next 30-35 minutes as we're together, I get a couple more wins on SPX. I did want to take a look at Boeing today. So let's go to this account. Let's go this workspace. Boeing's trading at 153. And I'm going to see if I could take some shares of Boeing. Number one, not take any shares. I don't want to necessarily own the shares because I don't really want to allocate, $12,000 to $15,000 of buying shares. But if I take a look at the weekly chart, I mean, Boeing, COVID, we had a huge crash, obviously. Boeing was down about 79 to 80% on the COVID crash from high to low. We're still, into those COVID levels. Not $91, but I mean, we've got some really strong support here around like the 120 zone. And I'm thinking that with the hopefully implied volatility, that there's something I could say to maybe express I want to consider some shares around this like 125 to 120 zone. Let me see if I can do something on Boeing right here. So BA, maybe do a ratio spread. IV is still 100. I should be able to get a lot of premium for this trade. Let me have a look. So we have earnings on the 23rd. I'm interested in something around like maybe the $100 zone. Let me see if I can get something pretty fancy at like $100. So if I go out, like, let's go 80 days on Boeing, that's December 20th. If I were to buy, I mean, it depends on what the liquidity is here, but if I were to, if I buy the 105, that's not going to be what I want. So I don't really get a lot of credit I get credits within about $20 of price, but anything beyond that, anything like the lower deltas, like 10 delta or lower, you get essentially nothing for it. So I don't love that. I guess what I could do is I could just place a credit spread here around like the 125 handle, like the 125. These previous lows at 118. I think I'm going to do this. I'm going to do a 125 by 120 and try to get this filled for, let's say, let me see what an at the money is right now. This will give me a good idea if I can get what I want. So I can get 240 if I'm pretty much at the money. I'll try to do the same thing here. I'm going to do a 125 by 120 bull put spread. I'm going to go after a 2.30 credit. And that should be about a $270 risk for a $230 profit. I'm going to take 2 contracts here because I'm willing to accept shares of one of them and then dump the other one for a small loss. I don't mind taking Boeing and trying to repair the stock. At the money calls, you can get a decent amount of premium for it to do a quick repair. Similar to what we talked about, Trader brought it up yesterday in this session, asking me about MicroStrategy. So anyway, I'm going to put the trade order in here. I'm going to sell the 125 put, buy the 120 put, go after 230 credit, going after 2 contracts, and I'm going to set this trade up. So that's going to be a pending order. Okay, so pending order 9732, pending order. All right. Just need to get these positions pending. I'll add this in the Discord channel for my pulver alerts. And then we can run through some charts and some analysis. Okay, so that's pending. Add this into my tracker here. And then I'll update Discord as well. So that's a pending order. It's not filled right now. I was hoping I'd get a little bit more action today, like a ratio spread, but it's not looking great. So this is a 12/20 expiration, 125 by 120 bull put spread. I'm going after a pending credit at $2.30. And I'm willing to own shares. Okay, willing to own shares. That gets filled. Okay, really quickly, we are still seeing this China stuff just rip to the upside. I'm just trying not to get in the way of it. Making adjustments as we go. HSI is way up here today, up another 6%, just ridiculous. I expect to see pullbacks at some point, which is totally fine. I'm making the adjustment here as well. So we have a red candle on the day, but we had a pretty large gap to the upside. Baidu making an adjustment here, and FXI making an adjustment here. K-Web adjustment here. JD, man, this thing is nuts. So we bought it at 32.50. It was up to 46 today. Likely a pullback coming. Let me just put a fib on this one. And that's not guaranteed that's going to be the top, but I'm just going to pay attention to those levels. And we're just continuing to watch some good price action to the upside on China. This is, look, this is like pent up technicals where for the last year plus, I have been looking to kind of slowly and small position wise accumulate some exposure on some of these China plays. And this is taken off better than expected. And I think there's still some legs to it. I think, yes, we should have a pullback and maybe a bull flag and maybe a pause. But if it just goes absolutely ballistic to the upside, I mean, even if I'm I'm covered on Baidu at 125 and 130. If I get the stock called away or prices above those call levels and I have to roll for debits, I'll just let the stock get called away or just close it for a max profit. And not really worry about it. Baba, same thing. I'm running with those uncovered. FXI running. That's actually covered at $30. JD is running uncovered. So for what's uncovered, I'm trying to obviously hang on to some of those profits. So anyway, but China stuff continues to impress. Hopefully it still does. One thing I want to bring everyone's attention to today, I've mentioned this in a lot of sessions here. If we're going to see, a bit of a liquidity crunch or some wider credit spreads, JNK is a good instrument to watch for maybe geopolitical risk and some risk off trading. I didn't check currencies today, but here's currencies. So what do we have? Japanese yen, crazy week. Again, I don't know why anybody trades the Japanese yen. The amount of swings and extremes you're getting on the Japanese yen is absolutely nuts. But it is what it is. So how many of you out there are trading the yen right now? And if so, is it helping? Are you making money? If you're scalping and you get days like this, I'm sure it's great. But it's, we have I can't remember how many days. It seems like, every few days, it's like the Japanese yen is either the weakest currency in the world or it's the strongest currency in the world. And I don't know what you do with that. So I still think we have these massive moves from like July's tops and bottoms into August 5th tops and bottoms, depending on what currency or correlation you're looking at. So anyway, it's just wild stuff. Yeah, I bet you did. There you go. All right. So anyway, watching JNK in case we have some widening credit spreads. Right now seems to be pretty tight. But if this starts to get loose to the downside, then we are definitely going to be looking at some risk off trading. Taking a look at the indexes really quickly, going top down. So S&P, NASDAQ, Dow, Russell, dollar, oil, gold, silver. Oil had a lot of drama yesterday. I posted this update in my trading journal section. So let's look at the SPX, starting off today. So yesterday we started off with a red day. Everything was down in the US yesterday. We're kind of fighting back a little bit here and there. I don't know if the market's going to be able to, breach these highs anytime soon. We might just have a little bit of chop going on in the U.S. market, so I want to keep a close eye on that. So we're up a little bit today, or just at least a green candle. NASDAQ, same thing, kind of fighting back from yesterday's sell-off. Dow, sideways. Russell, fighting back a little bit from yesterday's sell-off. Volatility has faded slightly. We had about a 25% move from low to high, ended up closing about 15% higher on volatility yesterday. It's fading a little bit today. And I've got to check on my SPX positions for, hang on a second here. So my 3, okay, so I need to watch this one. So 690, I'm going to go make the adjustment here for a 690. They cancel it? Canceled it. All right, so that's a 690. This one should be okay. Credit pending. All right. I got to go to this account here. SPX 1, 2, 3, 4. This was initially filled for 365, so that's going to be 730 debit. Keep an eye on that one. Why are you canceling my order, dude? 1, 2, 3, 4. Close. Hmm. 6.90. That's weird. All right, I'm just going to keep an eye on that one then. I'm trying to put in a stop loss at 690 just in case, but I'll monitor this one. All right, never mind. I'll come back to that. So volatility's down. Dollar index. This is why I kept saying you got to watch that bear trap on the dollar, and we've seen 3 days of dollar strength, which is anybody surprised by this? If you look back and find this really nice structural support, the dollar's been holding that 101 level, that 150 level. It just was sitting here oversold, overextended, bear trap city, and now we're ripping up here for just the last couple of days. Is it truly risk off trading? A little bit, not a ton. And honestly, yeah, even if the dollar is strong right now, I don't look at this dollar as making some wild move to the upside. I would say the dollar, maybe tests this area right in here, and then I look for the bears to come back in and either push it back down to the same lows or possibly resume selling. But just be prepared for some choppiness on the dollar. If we pull back into this area or like the halfway point, I'm just looking for confirmation to turn on the dollar. So my goal is to be selling the dollar. I'm just looking to sell it at higher prices. That's it. Okay. All right. So dollar is up. I'm going to set a chart alarm in here if I can. 102.13. If we pull back into this kind of structure zone, 102.50 to 103 would be kind of a sell zone for me. I'll put a 102. I'll do 102.50. 102.50 and a resistance area on the dollar. Look and then see if I can get some sell pressure on the dollar. Let's go to oil. So tensions rising in the Middle East. We've got missiles firing like crazy. Lebanon, Hezbollah, Israel. It's ugly. It's not fun. I hope this doesn't escalate more than it already has, but you never know. Oil prices are up. I had a long discussion yesterday on oil prices, inflation. It's going to matter. I mean, if oil prices go up into the mid 70s, it's going to impact what we get readings on later this year in inflation. I thought it was interesting yesterday going through this third-party Trueflation reading. We've seen a bottom in inflation. So according to this is kind of nuts. This bottom in inflation, it doesn't read the same way as the CPI that we're going to see next week on Thursday, but something tells me that the year-over-year 2.5 that printed, and we're having an updated print on Thursday next week, something tells me that we might print a low, let's say like 2.3. I'm just guessing here. But if we print 2.3 and it somehow reflects what this is doing, that might be the low that we won't see ever again, or at least for a while. Especially if oil prices are going up, inflation is going to have a hard time going lower. Now, core CPI is different because that is excluding energy and excluding food. But to the everyday consumer, you pay gas at the pump and you buy groceries at the store. And those are the two like biggest items for what we feel is inflation every single day. So I'm curious how this all plays out, because if we have a bottom in inflation here that's starting to go up, we might see the print and the timing of this to be like, oh, look, it's 2.5 and it's printing, it's lower. Excellent. The Fed is closer to the target, which justifies the rate cuts. But if we see a print of 2.3 and everyone gets excited, but then the next time we print, we see like a 2.6, I do wonder what that does for like the Fed's path moving forward, right? Remember, we have inflation next Thursday on the CPI readings. We do have the election on the 5th. We have an FOMC on the 7th. They're still looking to cut rates. The market might ignore inflation for right now because we're still in Q4 and seasonality stuff. But going into 2025, if inflation is not improving, all of a sudden we might see the Fed pivot back and forth. What was the talk for the last 2 years of the Fed? Inflation, inflation, inflation. And just this year in July, it's employment, employment, employment. Right now, all of a sudden, if it switches where employment's looking steady and stable, and inflation starts to get sticky again, that just keeps going back and forth, and the Fed, can't make up its mind on what's going to be their focus. So,
hey, Chris.
Frank, what's up, man? How are you?
Pretty good. How are you? How's this week been?
So far, so good. Just watching some levels here. I've got a couple trades running the SPX that I got to monitor.
Gotcha.
So that's
Same
all.
here. The oil trade is working out well. Oxy's doing better.
Yep.
Your call on China was amazing. My Baidu is up a lot.
Good.
I'm sure you're rolling in that right now. You got a ton of exposure from where
it's pretty good. It's pretty good. I mean, I'm just trying to stay out of the way. If it's going to continue to run and have some melt ups, like I'm trying not to, add covered calls and get in too quickly. Where right now the only one that's covered is I think Baidu is covered at 125 and 130. Baba's running uncovered. FXI is running at 30. That's already covered, but that's like my least exposure on FXI because I did a bunch of trades earlier. KWeb runs uncovered and JD's uncovered. So I'm letting them run. I'm not quite at profit targets yet, but I'm up a decent amount. I mean, I don't know what it is. It's probably maybe 50 grand right now. Maybe, hopefully more. We'll see. Let me check. So Baba is up 12.7. I'll just do a quick tally here. So 12.7. Baidu is up 12.5. I have some FXI, which is up 75. I have, JD is up 13. And KWeb is up 2.3. So I'm up $48,000 right now on China.
Nice.
Hopefully more to come. Yeah.
How long have you been in this trade?
A while. I mean, I've been holding some China stuff like on and off, and a lot of like income generating credit spreads. I've taken some shares, work a cost basis lower. I'd say on and off for a year. So this is why I'm also, as you say, like, oh, congratulations. I'm like, yeah, well, I've been sitting in these trades for a year. So it's more like it's about time. So I'm just trying to, let them run, let them still drift. And the moves we've seen have been ridiculous. I mean, when I'm looking at the entire US market flat or down, and I look at everything here at, 4, 5, 6, 7, 8% higher, I'm like, okay, there's clearly a lot of like just throwing money at these China stocks, trying to catch whatever they're going to throw at us. And I just think right now, if it's good for another like 30 to 60 days of just like drifting higher, fine. I'm watching price closely because, we also know that a move like this is pretty non-typical, right? Like it's a very atypical move. So if we go from low to high and this thing, consolidates here, then I'm going to look for one more push higher before I start taking profit. What I don't want to see is this turns to this. That's what I don't want to see. I don't know if that's going to happen. I think that there's enough interest here with the stimulus going on. If the U.S. can kind of navigate the current 30 days and we can get through this month of employment and this month of inflation, and then the election, and then all of a sudden the U.S. kind of realigns with like liquidity and just basically all the late season Q4 seasonality to the upside. If the U.S. and China can align for the push in the end of the year, I think everything has a chance to go up. And I think China's still a part of that move, and there's still a long ways to go. I mean, if I look at these charts and zoom out, all these China plays still have plenty of upside. I mean, to me, it's like I don't want to stop this thing at 121. It's like I want to see if this will actually move, and you never know. Like this could be for what's been building and accumulating for over a year. I mean, I'm talking. I started participating in this trade back in like April of 2023. So it's been over a year of these like little stabs with Alibaba, little stabs with Baidu. And, now it's finally starting to pay its dividends, which is nice. But if I just do a simple measure move, like 130 is conservative, gaps up here at 150 to 160, I'd be really happy with that. If we see a big rotation into non-US or even just this flood into like just buy everything, I mean, I don't know, Frank, it might head up to, $150 to $200. And as long as I don't get in the way of it, that's a big profit for me. But I will say this, once I take my profit, I'm probably not participating any further, most likely. Or if I do, it's going to be like defined risk option stuff, and that's about it. I'm not going to chase that stuff.
What do you think will have to happen for it to have a harsh correction?
For China to somehow say that their stimulus package is going to be less than expected. So basically, they'd have to come out they'd have to vocalize. We said we're going to do this, but we're going to be. I mean, they would just have to completely erase what they just said. And I think if they just keep their mouth shut right now, there's enough order flows going in for 30 to 60 to 90 days that I'm just trying not to fight it. So, gotcha. Yeah. Or I guess the other side would be what they can't control would be like other geopolitical stuff. If this Middle East stuff escalates even further, it won't really matter, what China's doing because maybe it's a risk-off environment across the board and that sentiment takes a big shift and all this money gets pulled out and goes into safety. I don't know, but we'll see. So I'm just, like I said, I'm just watching day by day. It's pretty interesting. What else do you have going on, dude? Did you see my trade in Nike? I took a little profit on Nike. That worked out pretty nicely for a morning.
No, I did not see that, but
yep.
I'm also exposed in Nike. I got it. I think it was after earnings was it last earnings? I got it in the 70s, I think.
Okay.
And so I've been just holding on to it, but it had a rough earnings report, I guess. So price fell like 7%, but overall the trend has been up. So I'm happy that I'm still in it. I honestly like the stock. What are you looking at like limited upside or like what are you doing? Are you trying to sell puts in it?
It was I'm already out of the trade. Like when I did the ratio spread and the credit spreads down here, that was about a 75% profit on the ratio spread. So I just took it. And then I did the trade here where I bought the 89 put and call and I sold $10 wide and it had about a $7 move. So I protected, I took a 560 debit, closed it out for 680 this morning and made about 20% return on capital and I got out. The expected move was about $8 and it moved 7 and change. So I thought that was good enough for especially holding it for one day just to get in and out. So
yeah, very good trade.
Yep. So it was fine. So that trade is, I can delete this stuff now.
I'm looking at gold too. So pulling up GLD.
Okay.
So do you think geopolitical tensions have anything to do with gold's price as well? Do you think is that what caused the spike yesterday? Like, were we expecting a greater pullback and then we saw the news?
Probably. Yeah. I mean, I think oil was the big tell yesterday. I mean, oil had an 8+% move on the day from low to high. Like this is a wild candle in oil. And I think that's what pushed gold right back up to those recent highs. So yesterday's candle from low to high up 8.06%, give or take a couple of decimals there, but an 8% swing in oil is very aggressive intraday. I'd like to see that oil maintains bid off these 65 to 67.50 levels. Now, I see that as just support, but the problem is this support in addition to crazy amounts of geopolitical risk that might get more severe? I don't know. So, I mean, if oil prices are going up because of geopolitical tensions, then I think gold continues to stay pretty bid. And even with my, simple pullbacks, I'm like, look, I will gladly add some trades on GLD and add some trades on gold futures if I can just find a balance. I mean, even the 50 period moving average is so easy to hit. And it's like, we're not going to hit it, or we're not hitting it yet. So I did mention, and I did a video on this yesterday. If I see that we are about 20% above the 200 moving average, I'm looking for a reversion. That doesn't mean I'm shorting gold. That just means that I'm looking for the likely pullback. And so I definitely want to buy it. But the last time we saw it, like right here, it was pretty overextended. I think that was around 15%. Let me double check that number. So we hit this high here, and we were up around 15% above the 200 EMA, and we went sideways. We obviously didn't hit it, but we at least let something catch up to it. And so it catches up to the 50 offers support. So same thing here. If if the 50 offers support, and maybe it's this, Frank, maybe it's just sideways and the 50 catches up, and then we can use that as another, kind of dynamic support to keep it going higher.
Yeah, I agree.
Anyway,
just waiting on that pullback to happen. We saw a 1% pullback, and I was thinking this could be it. This could be the only thing we see. And that kind of came true yesterday, but I also think if these tensions or the news starts to dwindle in the Middle East, it'll probably start coming back down and taking a breather. But yeah, this uptrend was way too steep.
Yeah.
So it's just not something you want to be chasing right now. But
I agree. I'm not chasing the upside. That's for sure.
What are you thinking about stocks? Because I'm looking at the S&P. I took a trade on the SPX this morning. I sold a bear put spread at this green line, which is 56.75. So as long as price stays above that by the end of the day, it'll expire for full profit. I think it was $1.20 credit.
Okay.
So far it's looking decent, but a lot can happen during the day, so don't want to say anything yet. But that's what I got going on today.
All right. Very nice. So anything, I'm actually looking, so price wise today, I've got SPX here. We're starting to get some gamma levels getting filled up to the upside. Let me go back to SPY and see if things lighten up in real time. So nothing really on the bullish side. We came right down to my gamma level at 565 this morning, bounced off that pretty aggressively. We just filled the gap. Still haven't taken out a recent high from yesterday. I don't know. I'm a little, I don't know. I don't want to say I'm bearish necessarily, but it would make sense to me that there's just a lot of kind of uncertainty in the market where we may not be able to justify new highs until we have the market more excited about something like non-farm on Friday, or maybe inflation next week on Thursday. Obviously, when inflation rolls out Thursday, we're going to start getting into earnings season. So is inflation next week? I think it is. So we have non-farm. So ADP was better today. We have unemployment claims and services PMI tomorrow, non-farm Friday. Next week should be on Thursday, should be CPI. We have minutes on Wednesday, CPI on Thursday, and then earnings season is officially kicking off. Mag 7, I think, is either this week or the following week from the 7th through the 11th, or it's the following week with a lot of the Mag 7s reporting. And that's the combination. I mean, other than that, it's all election. I don't know if you watched the vice presidential debate last night. I didn't. It didn't really budge the market. I don't know. I don't really care. I wasn't going to saw a little.
It was very respectful.
I mean, that's good. Better. But I mean, I don't know if everyone is just expected to be drama. I just finished the Mr. McMahon thing on Netflix. So I'm like, is that what we're doing? Is that our politics situation? Is just everything's like, it's all like hyperbole, and it's got to be the biggest extremes. And so at least it was respectful. Respectful is nice.
Yeah.
Anyway. All right. But either way, whether we like it or not, there's an election coming in, 30 to 40 days, and we'll figure out what that looks like for the markets too.
Yep, we will see. I am with you though. I don't really see much room past the highs. I don't even know if we'll go back up and touch the highs again, but I think that today's news wasn't necessarily bad in any way. I think we'll probably just get a lot of consolidation. At least that's what I'm hoping for. Just as long as we don't break under that level, I don't really see a real catalyst for a move lower unless we get something worse happening out in the Middle East, which would be bad. But
Okay.
today seems not as heavy as yesterday.
Yeah, yesterday it was definitely leaning like, all right, we've got another kind of rough start to the month. One thing I looked at from yesterday's price action too, and this still matters. I mean, if we go take a look at the price action from the last couple of weeks, so a lot of volatility on Monday's close, Tuesday's open. We finished here yesterday, we pushed down today. I mean, are we making lower highs and lower lows? We did take out last week's low, so I would imagine that based on the probabilities I see, that this would still be a red candle for the week. So I'm still looking for the week to kind of finish red, finish choppy. If price starts to roll over and roll down, I'm looking at this potential gap fill on the FOMC. So the trades that I'm in to take advantage of that, it would be, so if we get to this gap fill, the instruments that I'm using, I am looking at a MES, so MES long put and an MNQ long put, and I think I have a broken wing butterfly on that as well. I have an ES broken wing butterfly. So just a couple of stabs there. If that gets filled by the end of October, then there's some good profit to be had. If price falls aggressively, then my long puts with no cap, I'm going to try to take some profit on those if we end up pushing down.
So are you betting? Are you trying to collect premium until then, or are you betting on like?
No, those are just hedges. Those are hedges. I'm not long. Like I'm not doing anything directionally. I think that the bigger flows are coming in like after the election, in my opinion. I think this market. So I heard some interesting stuff. Go back to 1950 to now, and anytime the market's been up over 20% in this first half of the year, October is typically a down month to the tune of like an average of like 2 to 3%. So it's like October sets up, if the market's had this great performance from like January to September, October typically offers like a dip to buy into the end of the year. That's like a 70 plus year track record. Now, there could be a little like seasonality and cherry picking to that, but it does fall in line with what we have. I mean, the market is up 20+% here, like 20 year to date. Go to the sectors right here, look at the S&P. We did cross year to date. I mean, we're up 19.68% year to date on the S&P. So we're right there. Like, yeah, I mean, usually the first half of the year over 10%. Market finishes higher for the rest of the year. So I still think those momentum indicators are still there. I still think the flows are still there. I just wonder if the market won't make a bigger bullish move starting October. It's going to wait until after the election, and then it's just going to keep doing its thing. So I don't know if the market has a big reaction. I mean, if Kamala Harris wins the election, the market may not have a huge reaction as opposed to like a change in leadership, I guess. If Trump is president, does that mean more tax cuts, more, I guess, deregulation? I think tariffs will be a terrible thing for the economy and for inflation, but the market might get excited on just tax structure and cuts and things like that. So I have no idea. I mean, 2016, there was a huge Trump trade. That was a wild move in the currency market, wild move in the stock market, but who knows? Like, we're sitting here near all-time highs, and I'm just following along with the structure I see. It's like, it's hard for me to be bearish outside of this would have to break for me to say, Frank, I think we have a bearish situation. But until then, I think that all we have is we have some indecision, right? A little bit of pullback, maybe to the tune of, let's say 2 to 5%, something like that. Doesn't violate this low, and then there's still room to go higher. 6,000 could be the milestone this year, and then we settle back in, some reversion. Again, one thing we could watch for is go to the 50, the 100, and the 200. Just taking some really simple moving averages. We're not crazy overextended yet, but if this keeps going higher, I'm going to look at the same thing I looked at on gold. How far away do we get from the 200 in addition to the bars? So if we have a high bar count, like 300 plus bars, and we have a distance of, let's say, 20% higher or lower, I think that reversion is very likely.
Yeah.
So anyway, that's what I'm looking for.
So the higher the divergence, the worse the correction, or the more
or just the more necessary the correction is. It doesn't have to be like, it doesn't have to be a nasty correction. It just means like we'll just stop going higher and start winding down. And and if it's an extreme where we get like this ballistic move to the upside and this melt up, well, then the correction is going to be a little bit more violent. I mean, if you like China, for example, it makes me a little bit nervous to see that type of move. A lot of times that type of move, when it's done, can oftentimes correct very, very violently. But if we go up and we at least base a little bit with like a bull flag, then there's at least a healthy market there to see that the order flow keeps coming in. But if we just go parabolic, I mean, that's going to end awful. Like same thing with lumber, cocoa, Bitcoin's done it in the past. Trying to think, I mean, hell, NVIDIA did it. I mean, you look at some of the semiconductor stuff, they were all parabolic and they pulled back a lot. I do have an NVIDIA hedge running as well. This one is actually so this is a good example here, Frank. Here is the 200 moving average on the daily, and we're over 400 bars. 400 bars on NVIDIA to find the 200. And at this period, let me see what that percentage was. So if I go up to the top, we were about 40% overextended from the 200 EMA. Now, there's not like some perfect rule to this, but I would say getting 40+% overextended, I think we're going to find it. And so I think NVIDIA, if not a lot happens, we're making kind of a move like this on NVIDIA. And I think this 200 EMA gets hit before NVIDIA has any chance of hitting higher highs. So I'm trading that right now. I'm looking to see if NVIDIA will come down and find this low or find this 200 EMA before I start to reposition long. So that's all.
Gotcha.
Yeah. But
I like that.
Gold's decent. Silver's decent. Bitcoin had a pretty nasty pullback the last couple of days. Mag 7 stuff, let's take a quick peek. Apple's down. Amazon, I guess flat. They're flat. Google's down by 1% today. Meta's down 0.7. Microsoft down 0.6. Netflix is up. Go figure. I don't know. Nvidia's up 1%. Tesla down 5% today. Yikes. Any news on Tesla? Let's see.
Yeah, I wonder why.
That's a big miss. I mean, not miss. It's not an earnings play, but that's a big gap to the downside on Tesla, and I'm not really sure why.
They had delivery numbers this morning.
Is that what it is? It says will report Q3 deliveries, but I don't know if they did it yet. Maybe they did.
It says Tesla stock is down after solid delivery numbers.
Okay.
So
well, I still like Tesla. I'm just saying I want to buy it lower, a lot lower actually. So I put the trade on. I need to update my trade for. I need to update my trade for BA. I did a trade on Boeing today. That one's I'll put in my pull report section for Discord. Bond wise, things are down in bonds. Yields are up. Look at this 30-year, man. 30 years up, 20 years up, 10 years up. I think the bond market is making everybody feel foolish for jumping into this rate cut stuff. It's interesting. So we're still inverted by 13 basis points. We have dipped a little bit. I wonder if this actually heads lower. And I mean, I don't know if we're going to get inverted again, but that's one thing that would probably keep the market humming along would be getting back to an inverted yield curve. Not that anybody wants to see that, but I think that's necessary, especially with the correlation of the labor market.
Yeah, watching it drop made me wonder if this was just going to blow over soon. Let's see the T10. We're at what, 14% now?
For what?
13% or 0.13%.
0.13 I think is the reading. So 13 basis points. Let's go to some boring stocks. 22.15 on AT&T. I'm still letting this one run uncovered. That expired, so it didn't get called away. Let me see here. I'm going to take a look at AT&T. I might throw in another covered call. I've had this one for a while. It's been a good dividend play for me. AT&T. Currently up about $1,700. If I were to take the trade off, let's go here. So if I go trade, I can get 24 cents. Let me go out another week. I'm going to try to get right through earnings. Let's go to the 18th, right before earnings. Earnings is on the 23rd. I'll go to the 18th. You just get no premium for it, man.
I
I'm
mean,
just gonna
it
let it
doesn't
run, dude.
move.
It doesn't move. I know. And honestly, let me look at the structure here. AT&T hopefully has some room to catch up. I guess question I've got to ask is, have we done enough of a push to the upside that we get a pullback? And I think it might be in my best interest just to take profit. So if it's going to pull back on earnings, I can obviously like get back in and reposition. I like this back into like the $20, the $24 area. There's a lot of support right in here around $24. So that was kind of my price target to end up taking some profit. Unfortunately, I just don't see like covered calls offer me much. I mean, if I want to lower the cost basis by, it saves me $100 right here if I get in with the $22 call. But if it goes to the upside, I'm capping my gains and only getting 36 cents for it. Where if we go to $24, that's $1.85 of extra gains that I'd rather just sit on. So I think prior to earnings, I'm just gonna let AT&T just do its thing. But I might make a decision to close it out prior to earnings if I've got a decent chunk of profit. If I'm up like $2,000, I might just take the profit.
Yeah.
Let's see what else.
What else?
What else you got going on, dude? I've got I want to find some extra trades, but I'm just trying not to get in the way, dude. Like, I like my position on China stuff. I'm going to let them run. I'm picking my battles on the indexes. I'm, taking some stabs every day at the SPX, and that's going pretty well. I had 2 out of 3 winners today. The third one's still running, but I've got 2 winners out of the 3 that I've taken. I'm still monitoring the other trade. And
What
then
kind of trade?
what's that?
What kind of trade are they?
They're like little synthetic strangles. So I'm just trying to sell some premium in the open and grab a couple of bucks. So I did like a 335 credit and took a 295 debit. So I grabbed 40 cents a contract. And so I typically do that early in the mornings.
Nice. I'm doing not the same thing, but I guess in a way betting on less volatility at the same time.
Mm-hmm.
But so this morning we opened up lower and then we continued to fall for like 30 minutes. So then that's when I took the credit spread, the bull put spread. So I guess I'm not doing too much, but I am just kind of like trying to stay out of the way as well. Just don't get too fancy with it and, let the trade do its thing. So far, it's been working out pretty well. So nothing has really gone against me yet, but I probably shouldn't jinx myself. We've seen some good trades so far, just selling at the lows or selling at the highs and just collecting premium. So
yeah, that's not bad. I think it's just stay afloat. I mean, I have some hedges that might not pay off at all, and that's okay. But I'm looking to see, if the market just kind of stalls and hums along, maybe we have a bit of a pullback. But look, any type of pullback here, as long as we're not taking out this this post Labor Day bottom, or obviously threatening like this support right here. I mean, even if we did that, I'm probably going to buy I'm going to buy the SPY. I'll buy SPY. I'll buy Qs. I mean, my hedges would have to be something. We'd have to get something pretty nasty, like 2-3% quickly, and then my hedges would pay off, and I'd probably be good closing those up, and then just making sure things are stabilizing from there. But I'm not really trying to overtrade this right now. I think that the way I'm positioned, I mean, my returns so far for the year have been pretty solid. China is now kicking off in a big way. I think the next big leg to my trade would be Bitcoin. I mean, if we see Bitcoin revisiting lows in the low 50s, then I did put on a fresh trade on MicroStrategy. So I did a 80 by 70. Those are both sell puts, collected 725. I'll be watching that closely just for some income. I have my this is a 1-1-1 trade. So I've got some income where between these 2 trades right here, I mean, I know I had a trade for like $7 that already expired for profit. This one would be another roughly $9 of credit. So, I mean, without owning MicroStrategy, I mean, there's $1,000 for one contract. I just think this is either a range that I can participate at the lows, or this thing rips to the upside and this is just income. I don't own any shares of MicroStrategy. I kind of want to say that I'd like to own it, but I'd like to see a pullback first. In fact, I'm going to set a chart alarm here, Frank, around 120. And I'm not going to buy like a full tranche. I'm not going to buy 100 shares, but I would probably throw in like $1,000 to $1,500 at it and just kind of start a little bit of a campaign for dollar cost averaging. And then the rest would be just, watching everything else. What's the overall consensus? Where are the Mag 7s at? Is this a broad market? Are we making higher highs? I wouldn't mind seeing a pullback though. Not extreme, nothing that's going to like damage the kind of the integrity of this uptrend right now, but there's a lot of support in here that can still hold nicely. A little pullback to the 50 that shows bid, a little pullback to the 100 that shows bid. To me, that makes a lot of sense. I wouldn't be surprised if it does catch bids here, that the 200 just keeps doing its thing. And eventually when we get overstretched, I'm going to watch, and you and I will talk about that rate of change and that percentage distance. And then I'll get a little bit more bold when it comes to levels that I would kind of call a top. Because to me, this is, if we get above 6,000 and my price to earnings, price to sales, price to peak earnings, all these valuations where it's higher than it was in 2020, higher than it was in 2008, higher than it was in 2000, something tells me that the market, as it always does, will find ways to correct. Does that make sense? Like if we're showing like 30 price to peak earnings and the historical high was 27, I'm gonna be like looking for tops. I'm gonna be looking for price to fade, and you never know what's gonna cause the drop, right? I mean, and that's the one thing, is everyone's calling for recession. The U.S. is gonna roll over, but it's probably gonna be the thing you least expect, and that's what is so scary about a correction that could be 10, 15, 20%. Is it could be bad. So nobody knows. And the only thing I'm watching is, we talk about this, but JNK. If this starts to go down here, Frank, we got to pay attention to this, because if this drops aggressively, that means that lending, liquidity, credit conditions are getting a little bit tighter, and that's usually not good for the stock market. So we haven't seen that yet, but there is a pretty decent gap from yesterday with rising Middle East stuff, escalated tensions geopolitically. So unless we see this was immediate V bottom, this was V bottom. So I'm not like, oh my gosh, it's happening. It's like, I just want to watch it. So this is something just to spot check each and every day. Our job numbers, we'll get employment. It's unemployment claims tomorrow, or the continuing unemployment claims tomorrow. And then we have non-farm on Friday. So I think that's a big one. What are the numbers for Friday, real quick? If we go to Friday, I think we're expecting like 140K.
So I think we're expecting more. It's almost like unchanged, but I feel like that could be setting up for a big beat to the upside.
You think so?
Well, I just think that, so NFP is very unpredictable, but what we needed to see was the Fed's justification for cutting rates so aggressively, because the forecast was 25, and then Fed Watch went up to 50. So they're there to save the labor market. It's no longer about inflation, really. And we've seen better jolts, better private payroll numbers. I kind of expect non-farm to be better. I don't know how much better, but I think maybe a solid beat in what we're expecting. And then I think that's going to be the main driver. I think CPI is not really going to do much unless CPI is
if it's higher.
If it's much higher.
Yeah. If
it doesn't really move higher or lower, like say it's a little higher or a little lower, I don't think it's going to do anything.
I agree. I wouldn't be surprised if we get, so CPI is always like lagging. It's lagging metrics that go into the CPI reading that we're getting next Thursday. I wouldn't be surprised if it is an improvement from the 2.5 year over year. But again, watching oil prices, there's a pretty easy correlation here. If you go to oil prices, let me get rid of these moving averages here. Go to oil prices, and you look at this compared to Truflation. So if I just take a screenshot of this recent high in April to current, and you go to, let's go April of this year. This looks pretty much identical to oil, right? April of 2024 to now, and then oil. You might as well be looking at oil. So I think this is a big piece where the U.S. might think that everything's looking good and employment's getting better and inflation's going down, but in a quick geopolitical escalation and oil prices going up $4, $5, $6, $7 or going up, maybe close to 10%, that changes the inflation scenario pretty aggressively. So I'm just thinking, like, obviously it's going to be month by month and data points, but I don't think the Fed is really going to change anything this year. They will likely cut. I don't think the Fed watch tool is showing anything different. It's probably still going to be another 25 cut by November, December. I know the probability for December is actually a 50 basis points cut. And so right now, this is November, looking at 25 basis points. And then December, the higher probability is 50 basis points. So I think the Fed is still going to cut, stay on pace, but it's going to get trickier and stickier in Q1, Q2 of next year if inflation doesn't continue to trend lower, because we will have CPI readings every month. And obviously the Fed wants to see inflation trending lower. Nobody's worried about it right now. But if oil goes up to $80, dude, it's going to stick. So I don't think we can ignore what oil is potentially doing outside of, if it holds support, that's fine. I make money on oil if it holds support. But what it does to inflation, what the Fed does moving forward in 2025, this might change the narrative a lot, where the market's already expecting another, 1% of cuts. And maybe I don't know. I think the worst thing is if they pause, right? They cut, 50, 25, 25, and then they go into 2025's rate decisions and they just pause. I don't think the market's going to love that. So time will tell. But I think right now, path of least resistance remains bullish. There's tons of liquidity coming in. Global money supply is increasing. So there's your M2. China's a big contributor right now. So is the US. We're at new, fresh highs. That's going to find its way into the market. I don't think we have anything outside of some oscillation, anything outside of some sideways movement. It could be a little bit choppy in here. Don't be surprised with these levels that I've noted on my charts, like hitting the FOMC low. That might be a decent pullback level. So if we go from high to FOMC low, that's about a 2.7% pullback. As long as we don't do any damage to this September, this is the Labor Day sell-off. If we don't do any damage there, we're still making higher lows, higher highs, higher lows, higher highs. It gets a little bit dicey in here if we form like rising wedges, but that probably blows off the top and then corrects later. So part of me is just like, look, let the markets do a thing. They're in orbit. Path of least resistance is bullish. Don't do anything stupid. Don't overhedge. I'm talking out loud and trying to listen to myself too. I don't want to overhedge. I don't want to overspend. If the best thing I can do is just sit on my hands for 30 to 45 days, let us get through this news cycle. Let us get through the election, kind of reprice with what it's given us day to day. As long as you don't do anything stupid, we'll probably finish higher in the year, Frank. So I'd rather not try to overhedge and just have a couple things in there where it's like, yeah, I'm hedged. I'm hedged out to November 15th. And if those don't pay out, then I'll probably hedge again until January, February, just in case. But, it's kind of the cost of doing business to make sure I can mitigate any type of, nasty drawdown. So
if you talk about sitting on your hands, to your point, we're back at where we started on the 19th of September. So we're just at the same price that we started out then. So I would just say that if you weren't selling options, like if you weren't doing stuff to, keep price like pinned down, probably weren't making anything. So if you bought the S&P like nearly a month ago, it would be unchanged today. It's just hard to really gauge where anything is going. I don't know if it's going to go as high as what you might be projecting, like all the way up there where that trend line is. I can see
6,000, dude.
So
it's single digit percents. We have another, 4.5 to 5% move by the end of the year. You don't think Q4 can deliver that? You don't think Q4 Q1 combo can deliver that? That's
So we
like where
have
all
3
the order
months
flows
to
come
get
in.
there.
What's that?
We have 3 months to get there, I guess.
Yeah, if it's by the end of the year, but we could also just melt up like, hey, business as usual, January, and the market's just like, we're going higher. Q4 Q1 combo is usually pretty darn good. So, we might not get there by December, but usually the markets get way less volume from Thanksgiving to the end of the year. And if that volume is just met with more buyers and more drifts and lack of sellers, the market covers a lot of ground with low volume. So if we start to see a tapering of volume every single day, but this thing is put into orbit, it is easy for it just to drift higher because there's no sellers, you know? So that's why I'm saying this could just melt up because everything's in place, cuts, gains. There's obviously like, you know, there's targets out there that everyone's trying to get to. Everyone's called for 5,800. You know, the updates of, okay, we'll be at 4,800 by the end of the year. We'll be at 5,000 by the end of the year. All of them have just been terrible forecasting. A lot of people are saying 5,800 by the end of the year. Well, does that mean that we go from current price, you know, down to 5,500, then up to 5,800? I mean, that's still a good gain for this last part of the year. Or do we go up to 6,000 plus and then pull back to 5,800? And honestly, none of it matters because they're probably dead wrong anyway. So I'm just looking at the structure of the market right here. I mean, to me, this recent push makes sense that if we have any type of resistance, it's right around that 6,000 handle. So any pullbacks, I'm staying bullish. I'm doing campaign trades on the SPX or the SPY and the QQQs. I'm letting China do its thing. I'm letting it rip. I'm hoping that the geopolitical stuff doesn't get out of hands and the markets just kind of shrug it off. We get through the election without a lot of drama. And so really it's like, if there's no major disruption, we should be okay. Make sense?
Yeah.
Yeah.
And it's just going to be steady upside, I guess.
Yeah. And again, slow and slow and steady, right? But it doesn't have to be ballistic, and that's okay. But I think what's happening is, you know, I had some hedges in here that paid out, some hedges in here that I lost, some hedges in here that paid out, some hedges in here now that I'm, you know, this is a big question mark. Are they going to pay out, or am I wasting money? And if it goes up higher, I'll probably have some hedges in here that might be wasting money, but I also think it's important that I can mitigate. Let's say if the market drops 10% and I can only have like maybe a 3% pullback, that to me is doing my job, where I'm taking on way less risk than what the overall market is as far as like pure beta correlation, you know? So I don't want to take on the same risk. So I'm constantly willing to spend the money to hedge, but I hate it when I lose it, right? I mean, that's why I don't spend a lot on those hedges. I think it's just important to have. So it's Howard Marks, it's Oak Tree Capital. It's just, you know, risk is something you have to monitor constantly, as opposed to getting caught off guard by it and then trying to scramble to you know, hedge after the fact. It never works that way. So anyway, I guess my summary for the day is I don't feel like I need to overtrade right now. There's definitely some income I'd like to position for. But honestly, I was just about to say, like, I could do like a bear, you know, a little broken wing butterfly at the top, but I'm like, dude, I think we could tap the top, Frank. I mean, this little like sell off. I mean, we could tap the top and tap the bottom and be the same place we've been since mid-September. So anything you think?
Yeah, I mean, but what time frame are you talking about?
I'm talking like maybe 1 to 2 weeks out.
Yeah, I mean, I can see it too. I can see us touching the all-time highs again in like a day or two.
So I guess for right now, this is probably pretty safe to. I've had these boxes on my chart, but you just mentioned this. Like we had the FOMC low, which I have, you know, it's my horizontal lines up and down. But just these last little wick lows, like look at this wick low. It was exactly low today, and then we have all-time highs. So right now, this is my new range for the SPX. And then if I go to the NDX, this one's a little bit more volatile, but interestingly enough, we came right back to the same low here and there. So there's my range on the SPX. Let's go to the Dow. I mean, outside of this like outlier all-time high that was rejected, and I will incorporate that, but we have the Dow that's sitting right in here with a lot of chop as well. So are we going to break out of this? I don't know. But I would say if we do make a break for it, you know, the Dow at these all-time highs, if it breaks lower, does it have room to go FOMC lows or maybe eat into some of these inefficiencies? Maybe. But otherwise, we could just stay. In fact, now that I see this, Frank, let me look at a freaking strangle on this thing, or maybe an iron condor. Let me go DIA. I don't know if the premiums are going to be good because I'm probably only going to go out to like this week or next week, but let's find out price-wise. 426 to 418. 426 to 418. All right, if I go out to Friday on the Dow, let me see what this does. So DIA. If I go out to the 4th is only 2 days, this is going to give me nothing for premium, so it's probably a lost cause. If I go out to next week, get these bid and ask prices to fill in here. 426. Come Come on, broker. So 207 on the 426 and a 418 at 237. I mean, I get 452 credit. Now I'm probably going to go, we're right in the center. Is it worth going outside the expected move? Let's find out here. So outside the expected move, these are way high in the deltas. I was looking at the technicals. Let me see. If we stay below 426 and above 418, like that's, I don't know. I mean, that seems reasonable. If I do a dollar spread here or go wider, let me go like 5 wide. So I can get 245 for risk of 255. I don't know. That might be a little tight. I'm just looking at stuff. 429 is way up there. I just like a strangle makes sense. What's up?
I would say look at this either tomorrow or Friday or Monday, because I think the IV could be much higher when you have NFP coming up.
That's true.
You can probably get more premium if you think that it's just going to stay in this range, which honestly, I don't really know if I would take that, because you get solid jobs data that could definitely break the highs, in my opinion.
Yeah. Yeah, for sure. And I'm looking at so the Dow has its weekly expiration. So I was going to say if I did like a Friday to Monday, get it over the weekend, but this one doesn't have Monday, Wednesday, Friday expirations. So this Friday with non-farm, you're just not getting enough credit for it. So it's not worth it. It's not worth the trade. But I don't know. I'll kick this around. I might wait for non-farm. I might place the trade after non-farm to see what happens. If non-farm is still noisy, I might place a trade, above and below and just go to the expected moves and see if I can grab something.
Yeah.
Big Mike, I see Big Mike in there. I insanely shorted the Hang Seng today while I made money. I'm never trading that again. Yeah, I'm sure those are all pretty crazy. So they're nuts, man. I mean, and I'm not trying to fight it. Like I said, a bull flag to me is what I think is going to be like the healthiest situation for these China stocks. I just want to see a bit of a balance. I mean, pull back to the 30%. I mean, really simple, like retracement level would be if we had this blast off move, we pull back to the 30%. There's a good chance if this bounces, we're going to retest the highs. If we pull back to a 382 or 50, then there's a nice accumulation zone. We get back to the highs and then some. So obviously I'm looking for higher highs to form here. And if I get higher highs, then I'm probably going to start taking some profit. But all right, man. I will continue to look. We don't have a lot of earnings this week, but I think what I'm going to look for here, I still have a whole slew of stocks I posted in my Telegram a while back. Let me go here. Where are we at? I did a list. It was like 35 or 40 stocks. I'm just going to look for this really quickly. It's way back here. Come on. I'll find it somewhere. Fun with Telegram. There we go. I'm going to take a look at some of these and see if I can find something. Boeing, I've got a trade on that, but I didn't like. I was going to do a ratio spread. It just doesn't look great, so I'll stick with a credit spread if it goes lower. Lululemon, I have an income trade on that one. That's one that I plucked out of here. Intel, it's tempting, but I don't like the fair market value on Intel. Just doesn't stack up the right way. This is another one. I forgot about this one, Frank. I think I took all my profit on this one. Do I have anything left on Yum C? So this was Yum Brands China. So they're fast food stuff. I also had, I'm out of these trades. Okay. So that was all profitable. I did a bunch of puts on YUMC. And look at that thing. I didn't own any shares, but this thing essentially gave me like 95% profit on this recent run. So
Nice.
Didn't own a single share, but what a rip, man. I mean, low 30s to up 73%. Good Lord. Crazy.
That's great.
Yep.
That almost looks like a short squeeze.
I mean, but in a way it was. It's like, I mean, how long, how many months in a row is like China's uninvestable? China's uninvestable. It's the worst. It's the worst. Their balance sheet recession, blah, blah, blah. It's like, I get it. But this also had contrarian play written all over it. And it also had no acknowledgement for what the country just did, which is not a surprise. Since COVID, they've done nothing right? Like no fiscal stimulus, no anything outside of maybe a little bit of jawboning, like, okay, we'll support the economy. They say it, they don't do it. And then this time they're like, we're doing it. And the market got all excited. But biggest package since COVID. So yeah, it is a short squeeze. I don't know if it's going to get faded, maybe it does, but if there's room to run and you've got a country that's, lifting animal spirits, so to speak, that this lift and this pause and this lift, it's like, who knows, man? I mean, these things, look left on your chart and see if this price action goes after those previous highs, and that's the trade. So anyway, that's all. Just crazy stuff, man. So I'm happy that I'm in it. I'm happy that I'm not chasing it. And hopefully there's some more profits to roll in. And then the rest, like I said, is don't do anything stupid. Don't overtrade. Don't do anything stupid. The markets for the U.S. just might be calm and silly, sideways. Box on the SPX, box on the NASDAQ, box on the Dow, and the Russell a little bit uglier. But I don't know. You could argue when this thing's ready, if it's ready. I would like to see another rate cut out of the Fed, possibly boost the Russell a little bit, if possible. But I don't think there's any reason to get into the Russell unless we stabilize in here where we have some gap fills. We have lows, higher lows. Let me take a look at those moving averages really quickly just for something very basic. Yeah, I mean, if it finds, here's a good one, Frank. If we find the 200 EMA on the Russell, I'll probably get some credit spreads and look for another push up. So that might be my nearest term trade rather than waiting for a strangle or something on the Dow. If the Russell melts down to the 200, I'm going to do some credit spreads and trade, 45 to 60 days out and try to grab some profit. So that's another little index trade. I like that one. That's
I would look at that as well.
Yep. So, all right. We can always find something. Okay, cool. Anything else for you today, man?
Nope, not today. Tomorrow I'll probably be looking at more credit spreads.
Okay.
I'd imagine it wouldn't be a heavy news day. We just have unemployment claims.
Yep. So, all right, man. That sounds good. Let's connect offline if you want to. I know I had some stuff to share with you, but anyway, if it works, it works. Otherwise, I'll see you tomorrow.
Okay.
All right.
Thank you.
Thanks, everybody. Have a good day. See you soon.
See ya.
Thank you for watching today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. We're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. You can fill out an application with the link in the description below. That's all for today. Trade safe, and we'll see you tomorrow.